Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, everybody. Happy Friday. Welcome back to another live stream. Hope you're doing well and ready for possibly one of the bigger NFP events of the year. In fact, maybe I said this yesterday on my video. This might be one of the biggest NFP reports of my personal trading career. And I've been trading since, 2017, 2016. This is a really big one. And if you didn't watch the video yesterday, I'll give you a very quick overview of my game plan going into this event, what I plan to do, what positions I'm already in and what positions I'm looking to get in, depending on what the data is. If you're new to fundamentals and you're hanging out here, you're in the right place. If you're trying to learn them, there are going to be 50 other live streams on YouTube right now, and some of them offer some very great value. But you've chosen to hang out with me here, and I appreciate that. But I also want to add some context to what you're going to get from a live stream with me, as opposed to most of the other YouTuber traders. There's, again, many different styles of trading that work, but what we focus heavily on over here is not just, we kind of act high and mighty about it. We call everybody else spike junkies, right? People who just want to trade the spike and they're just watching for fun and having fun with it. NFP is a very important actual statistic that tells us something about the economy. Whereas most people kind of think of NFP as just this, they have no idea what NFP even means. They don't know what it represents. They don't know how it impacts the markets. They just know it makes the market move a lot. And, here's the thing. To fundamentalists or even aspiring fundamentalists, it's very clear why this number matters a lot and how it could actually impact trends that are ongoing in the market, could cause reversals, could cause continuations. It's a really big figure because NFP stands for non-farm employment, non-farm payroll, and it's showing us employment data out of the United States. So what we are looking for specifically here today, guys, is we are going to get an update on let me choose a different color here. We're getting an update on the unemployment rate statistics for the month of August, right? It is September, so we report August and September, so on and so forth. Each month we report the previous month's data. So we're getting the unemployment rate, which is coming out here today. That's huge. And then we have the NFP, or non-farm employment change, non-farm payroll. This will tell us, excluding the farming industry, what employment change was like, how many jobs were added in the U.S. economy. Last time around, we got 114,000 jobs added. And this time around, there's a lot of pressure here because let me tell you why. The Fed is expected to cut interest rates this month for the first time. But people are trying to weigh whether or not this first rate cut is a victory rate cut, meaning things are all good and we're just going to start cutting rates because things are A-okay and things are just ready to start, the Fed funds rate is ready to come down normally and healthy. Or if we get bad jobs data today, meaning a higher than expected unemployment rate or less jobs added than were forecasted, if that starts to materialize, what that tells us is that maybe the labor market is in a bad spot and that the rate cuts are more of an emergency fix. It's like pulling the fire alarm as opposed to, something more soft and easy, right? So today is huge. NFP today is probably one of the biggest events, again, in terms of a job statistics, the number that I can think of in recent times. So we have no idea. Someone says, is NFP coming under expectations? You're going to see people saying sell, buy gold, things like this. Guys, again, I say this every single month, but please be very careful trading events like this. For onlookers who are, just tuned into the stream and you're maybe new to this stuff, we don't place trades before news. We don't ever advertise that sort of idea because none of us know what the statistics are going to be before. The only people who know what's going to happen before are probably doing illegal stuff and they're probably in very high positions of power. We don't have that luxury, right? So we don't do that. We trade by the rules here. And as rule following traders, which we have to be, right, whether you want to or not, we don't get access to that data before it comes out. So we wait for the data to come out. And real fundamentalists, we use that data, we understand what it's telling us about the market story, and then we place trades accordingly. I'm not trading spikes. I'm not scalping this. I'm talking about looking for intraday or swing trade opportunities that make sense in line with the fundamentals. So I have a small position long on gold as of, about 10 or 11 days ago. I picked up a swing trade on gold right around this level, came all the way back, retested my entry, and then has been moving back towards the highs. What I'm looking for on gold today, I know a lot of gold traders out there watching gold today, is I'm looking for weak jobs data to potentially cause a spike up, but I want to see if it holds. So if weak jobs data comes out, gold probably takes out the highs, which would be good for my position. I'm not saying that's what I think is going to happen. That's what I think will happen if jobs data comes in light. If it comes in weak, right, people are going to rally into gold. Why? Because a weaker dollar usually is positive for gold, and a weak jobs market causes people to get scared. And as many of us will probably already know, people like to grab onto gold when they're scared. All right. What if jobs numbers come out strong? Well, then in my case, probably I'll just hold this position. And if it's really bad and it's really strong and things are very, very optimistic from here, then I'll probably take a loss on this position. And I am risking that happening. Some traders will say, Nick, why don't you just close out of your trade? Well, because I don't trade like that. I'm not a scalper. I'm not a day trader. I'm a swing trader. So I oftentimes do hold through news. Today, though, there is an opportunity for me to potentially look to add to my trade. So if we get something like this, big pop through the highs, I may actually look for a chance to add to my position here and stay long, but even add more size to my gold trade. I discussed this yesterday, but my gold trade is actually kind of small on my account. I have 200 shares of GLD, which is an ETF that tracks the price movement of gold. And so I'm up about $775 into NFP. I could give back some of that today. If it happens, it happens. But if we are able to see weak jobs data and rate cuts are more likely to come into the picture, then I am looking for a chance to potentially add to my my gold position. Next up, though, I wanted to talk briefly just about the S&P 500 and the NASDAQ, which have started really sinking ahead of this jobs data with some of the weak other jobs data points that came out earlier this week. I'm talking about specifically job openings were weak out of the United States. We can take a look at that just really quick together, just so we're on the same page. Going into this, guys, we've been having some bad numbers. Job openings came in very weak during, I believe that was Wednesday that it came out. Wednesday came out very weak. You know what else came out weak this week? The private sector reporting 99,000 jobs compared to a forecasted 144. That's a huge miss. So a swing and a miss for jobs data so far this week. The question is jobs for NFP or NFP going to repeat last month's disappointing numbers again? And if anything tells us about what, or if history tells us a lesson there, that would tell you that the stock market did not like that. The dollar index fell hard. The stock market fell hard. It's not necessarily what I'm saying I think is going to happen because I don't predict these things, right? I'm not here to predict what's going to happen with job statistics. Especially many of you guys are probably familiar that they revised those numbers heavily in the past few weeks anyways. So, the reported numbers these statistics are inevitably a very difficult thing. Employment is actually quite hard to track. We could go down that conversation another time when we have more moments to discuss it, but we have just about 5 minutes before NFP comes out. And I want to take a look at the dollar index going into this as well. You get the dollar index trending lower here. If you get a weak print today, I would not be surprised if the dollar index is taking out the lows and never even made it back to some of these pullback levels that I was looking for. But if you get a strong print for NFP, it would also not be surprising that we could see a takeout of this area and perhaps go a little bit higher. In that case, I may look to start to sell the dollar if we get up into the 50% retracement, give it some room to kind of have a couple days of rallying. But that's a scenario for me as well. I am predominantly bearish on the US dollar. We have some pretty nice downward trends forming here and some confirmations on the edge founder. If we take a look at the top setups algorithm, let's just go ahead for a moment and filter out neutral readings. So now we're getting only our bullish and bearish readings. Here's a couple readings that we've got going into the print. You've got Euro, Aussie, and NZD, USD, the US 10-year Treasury bonds, Pound Aussie, Euro dollar, Aussie Swiss. Let's take a quick look at Euro dollar here today, just see if there's anything on this one. So if Euro dollar either breaks and retests or retests support, I may look at this one as a possible long entry. So if we get back down into this area, or if we take out the highs, retest entry for me there, both on the long side predominantly. So we'll see. I have no positions on Euro dollar going into the print, but I'm watching it close. Dollar yen, this was a big one to watch, guys. Last time around, this was the big slider, right? The yen got very strong on the last NFP report because it was very weak. So if you're a yen trader, you may think you're exempt from, US economic data. You are not, right? Last month, take for example, the Australian dollar against the Japanese yen. There's no USD component in there, right? But look what happened on USD jobs numbers or US jobs numbers last month. Huge move on Aussie yen. So please understand, most markets are going to move on this figure. It is a huge gauge of where the US and hence the global economy is at. So it's really important. In terms of other setups here, the TLT chart I've been watching might be interesting to keep an eye on. Bonds actually kind of look interesting to me. If I can get pullbacks on those, might be something to watch. Take a look at the put call ratio here just for a moment. So put call ratio somewhere in the middle, not too overly bullish or overly bearish at this time. Investors, take a quick look at this. Investors were a little bit more bullish, feeling a little bit more neutral here this week. So we can keep an eye on that as well. Take a look very briefly here with just a few minutes to go at the commitment of traders report. See where institutional money is currently flowing. We've got a big heavy position long on gold, silver, oil, pound. On the flip side, you got CAD, CHF, 10-year treasuries, NZD, and a bit of bearishness on the SPX. So got to keep an eye on this one. We can also take a look at the latest week's filing. There was some buying of the NASDAQ, some NZD, Euro, Aussie, CHF, Russell, CAD. There was some gold buying going on as well. And then on the sell side, we saw oil. No surprises there with oil slipping. Big money was selling. Copper, also some big selling. Bitcoin, USD. Interesting to just keep an eye on what smart money is doing. By the way, guys, if you want access to the Edge Finder, we're going to drop the link. Today's the last day for the 35% off sale. We'll drop the link here in the chat. If you'd like to speak to a member of our team to get access to our tools and data, that 35% off sale is ending soon. So we'll drop the link here in the chat where you can send a direct message to a member of our team and ask about the sale. You can pay with crypto, you can pay with card, whatever you want to do, PayPal, ask any questions about the software. We've got a couple people standing by who can help you with getting access to the software if you're interested. Guys, we got about a minute and a half here. Huge data point coming out. I'm going to go ahead and switch now to our all markets view just so we can keep an eye on all markets here, or the major ones at least that most traders who are watching are paying attention to. Let me walk you through what you're looking at on the screen. We've got the SPX here trending lower into the print. We've got the Dow Jones also trending lower. Same with the NASDAQ, of course. Dollar index is also kind of bleeding lower here into the print, but we'll see. That could all turn around here on the number. We'll pull up the numbers and react to them as they come out. You've got the pound here trending up slightly for the morning. Euro down for the morning. Gold pretty flat. And in the bottom right, guys, we got oil. So lots of stuff here, keeping an eye on everything at once. We'll keep this screen up so that you can see the reaction across the board to NFP. And we're going to go ahead and let's go ahead and roll our breaking news. Got about 30 seconds. All right. So just a heads up, we will be, don't go anywhere after the spike. We got like 1,700 people watching. We're going to be doing commentary on why these numbers matter, how they actually impact the markets here, just after the numbers come out. So please don't go anywhere. I know a lot of people just watch the spike and then they run off, but we should be getting the numbers here in the next couple seconds. Let's see how NFP impacts the markets. All right, Euro is lower, dollar index higher, NAS higher, SPX higher, US 30 higher. Gold is lower here on that print. Let's take a quick look and see what we've got in terms of numbers. Should be dropping. There we go. We had a less than expected non-farm payroll come out, and 4.2% for unemployment rate. So unemployment rate did actually come down slightly, which is positive. You had higher than expected average hourly earnings, and NFP came in light. I would actually say that's not a particularly bullish report here for stocks. We got gold moving higher because that makes sense. You got a little bit of weakness in the jobs data, right? Gold is moving higher off of that. And at the same time, unemployment came in as expected. But noticeably, alongside this, you got a little dose of inflation coming in, 0.4% as opposed to 0.3 for the average hourly earnings month over month. Remember that earnings are a huge contributor to inflation, right? If you get people getting big raises in this economy, inevitably what that means is that it becomes inflationary. And so everybody wants a raise. Don't get me wrong. I'm not saying anything bad about that. I would like a raise. We'd all like a raise. But as an economy, if everyone is getting raises, the tricky part there is that it causes inflationary concerns. And so at the same time, we've got a move lower in well, the dollar is now completely reversed. Look at that. You've got NAS down from the spike highs, SPX, US 30, all of them erased those moves and now just kind of sitting flat. And look at gold, guys. Are you kidding me? Look at that. Let's switch over to that and just take a quick look at gold. I am long gold, so I will take that this morning, no problem. Take a look, gold up. There we go. Very close to all-time highs, guys. We're on all-time high alert here for gold traders out there. I'm long as of August 22nd. I'd love to see this one continue. If we can see the break through this high, like a good push and close today, that would be a very good sign that we could be breaking out of this range that has held price stagnant for the last 20 or so days. It's been a very consolidating heavy number. But let's review these numbers one more time, guys. Let's first of all just get a quick updated reaction. NASDAQ didn't really actually move. It spiked up and then came back down. Dow Jones, same thing. You got the NAS, you got the S&P, both trading in the middle of their ranges today, but they've been moving lower this morning. You've got the Russell 2000 index. I'm feeling good about stopping out of my position for now. I could snap back the other way, but you got stocks moving lower here after the print. Let's review those numbers again and see what they tell us a little bit about this market. Why is gold moving higher? Oh my goodness. How did I miss this? Holy crap, guys. We got 114,000 last time, and that freaked the market out. Look what we got this time. We got 142,000 compared to the 164 forecasted. We reacted to that first, but did you miss the revisions? Do you guys see the revisions right here? Look at this. We were last time we got 114,000 jobs, and people freaked out about that. They just revised that number down to 89,000 jobs. Guys, we're not even in triple digits for numbers of added jobs last month. Oh my goodness. I'm actually surprised we're not seeing a bigger reaction to this. That is actually horrible. Dollar index is seeing the reaction. That makes a lot of sense. Look at the dollar falling down lower. Not only did you get bad numbers this month and bad numbers last month, they went back to last month's number and they said, actually, it was lower. It was lower by another 20,000 jobs. They revised the previous one down. They were expecting 164 this time, and they got 142. This is horrible. This is horrible numbers. And I got to say, jobs data coming in like this all week long, just bad numbers. Not to be a pessimist, but that seriously challenges the soft landing concept. Many of you guys know that I moved out of mostly of my stock positions this week, which, you know, I mentioned was somewhat of a risk, right? I'm moving out of my positions because I wasn't liking the way the jobs data came in. Going into NFP, I wanted to be cash heavy. So we'll see how today, you know, unfolds. Things could be very volatile for the day, but I got to say that reaction actually seems muted. So I actually think that these numbers are horrible and the stock market probably won't like this. So even though you're getting an initial blip, you know, up and then came down, I actually would not be surprised if kind of the market doesn't make a whole lot of move higher today. It could, and I could be dead wrong about that, but that's the thing about markets. They could do some crazy things. But on paper here, taking a look at my reaction to the statistics only, average hourly earnings higher than expected. That's not good for the inflation story. NFP came in lower than expected. That's not good. But the revisions were also terrible. They revised the previous one down. And then unemployment rate, I guess you didn't get a surprise there, but this is just flat, right? We came in line with expectations. So you're talking about a big swing and a miss, at least as far as I'm concerned, on this jobs print. This is terrible. So we'll see how the market reacts to this over the rest of the day. Some people might be wondering, why is the NASDAQ not rolling over harder? I actually don't know. I think that that's pretty dang bearish, to be honest. But you also have to remember, we've had a huge slide in the last few days. We've already fallen apart for the last few days. There's a possibility that the market might just bottom out for the time being, simply because the bad news is behind us now, right? Sometimes that happens in markets. Sometimes the announcement of the worst part of the news causes a reversal simply because, okay, now all the bad news is out and there's no more bad news expected. That being said, I also closed out of my SMH position. I'm curious to see how that's moving here this morning. SMH, I closed out right around here after the break of this support. That's moved a little bit lower from where I was stopped out or trailed out, and I took profits on that move. But we will keep an eye on this. Again, I stopped out or trailed out. I had a winning position on the Russell, trailed out of that yesterday, and we'll see how that one plays out. But really a volatile morning, to say the least. But I will say I'm actually pretty surprised by the reaction in the stock market. I would have thought that would have done it. That probably would have made it, fall apart, at least in the short run. And it still might. We'll see. But again, there is that possibility that when you get bad news, that the market has already been expecting bad news. And so that it kind of bounces back simply because, cat's out of the bag. It's worst of it's behind us, if that makes sense. But we'll see. I kind of remain pretty cautious when I look at this market. When I see these sort of statistics, I'm thinking, okay, yeah, that's a little bit rough. In terms of gold, though, we're making nice moves, very nice push to the upside. This one's making a lot of sense to me. And I mentioned earlier that I'd be looking to potentially add if we get a strong close today. So for me on this gold position, if we get a big close, let's say we close up in this range, if we get a big, nice, strong green candle today, I'd be looking potentially next week for a chance to actually add to my position and try and let this one run. Let's take a look at the P&L on this one, GLD. So I'm in this long position. We're up $930 on this one. So we'll see if this one wants to break through the structure highs. I'll be looking for a chance to probably trail my stop in. I'm liking this on the 4-hour chart. This is giving me a potential higher low. If you get a nice closure today, I may look to actually finally trail that stop loss into profit, lock something in on this trade, and see if it wants to keep going. So very much a nice reaction on gold. Makes a lot of sense that gold would be higher today off of that statistics, as people might get a little bit worried about the labor market. Though, again, very surprising to me that we're not getting a bigger stock market move lower off of that data, which I guess sort of just confirms the news of this week. This week, we've had bad jobs data points, which have already dropped the market a good bit. But again, I also would not be surprised if we roll over further today. I definitely lean in the short term bearish on the markets. You've got September seasonality, which looks rough. And yeah. Why are you calling it a revision? Because when they report jobs data, they also offer revisions to the previous reported statistics after they finalize the numbers. So when they report job statistics, there's some imperfections with the way they report. Stuff is delayed, stuff takes time. And then the following month, they revise the numbers. And people sometimes, put up they point fingers and they say that's a big, conspiracy, and the government is doing this and that with the numbers, and who knows if they are or they're not. But there is the process. I've looked into the process. It's pretty complex, the way they calculate jobs. So there is room for, things to be reported, then redacted, then changed. So anyways, they revised the previous reported number from 114,000 last month. They dropped that down to 89,000. So that is a substantial slide in jobs added last month. And again, double digits as opposed to what we're used to, which is hundreds to 200s in terms of thousands of jobs created. That's a pretty weak revision. And the number this month came in lighter than anticipated. So looking really sketchy to me. The jobs market's looking a bit concerning, I gotta say. So that makes me want to stay long gold. That makes me comfortable with where I'm at on gold. That's my one position right now. So my one active trade, I do have some stocks, individual stocks that I've just been buying and holding on to. But in terms of the majority of my positioning, gold, I'd love to see if we can close strong today above resistance. That would be a very good thing. Can't this be positive considering the impact we'll have on pressing the Fed to reduce rates? Michael, that's a good point and good question. Rate cuts, remember, are not necessarily bullish or bearish for markets. So if you're saying, for example, if you think like, okay, rate cuts are coming, now they're going to do 50 basis points, that's good. It's a be careful what you wish for sort of an environment. If you want the economy to be falling apart so that they cut rates more quickly, you miss the other half of this. Rate cuts, when they are done to just kind of like relax things, is very different than rate cuts when it's trying to save a sinking ship, right? So if we have terrible jobs data come out, which we had all week, it was bad. There's no arguing. This week reported just poor jobs data, right? So that doesn't necessarily mean that the jobs data, like from here, like we're just in a crashing environment, but it definitely is not a very positive improvement this week. This week definitely caused more doubt, more concern. So that makes people more like, okay, now the Fed might be cutting quicker to sort of stop the bleeding, which if the economy starts sliding hard and it accelerates too fast, the Fed is behind. It was what they call behind the curve, meaning they can cut rates, but they're not doing it fast enough or soon enough to save the economy from free fall when it's already in free fall, right? So I'm not necessarily saying that that's what I think is going to happen to the economy, but there is a possibility here, guys, that if we keep seeing data points like this, there is possibility of a recession. And a recession doesn't always have to be, a 2008 recession. That's a horrendous example of a bad recession. What I'm talking about is there's a possibility that you just see companies, contract their earnings substantially for some time, layoffs, unemployment rate rises, not fun stuff, right? But that doesn't necessarily mean it's like the end of the world. But with these sort of data points this week, you don't want to see that. You saw revisions to jobs data for the last year came in very poor. You had that was the biggest downward revisions in jobs since 2009. So something you don't want to hear. You don't want to hear since 2009 in markets. I can tell you that much, because 2008 was I wasn't trading during that time or investing during that time. However, you could do a lot of studies on markets, and every time you study markets, you find that 2008 is a recent example of one of the most horrendous times to be invested or to be a stock owner, etc. Anyways, guys, where do we go with this? Well, again, going back to my game plan that I started today on, I'm looking to potentially add positions to my gold long trade if I can get a break and retest here. Euro USD, I was looking for the retest or a break and retest here. So kind of in no man's land here, but if we can get a breakout through the highs on some of these USD crosses, might be some trades. On the S&P and the NASDAQ, nothing for me to do here. I'm staying cash for now. I'd like to see how these candles close. September is seasonally a poor month. We can take a look at data for that, because it's important that when I make those points or discuss a topic like that, I like to try and bring up data just so we can look at it together. So when I say September is historically a bad month, this is what I'm talking about. You take a look at seasonality. Historically, it has been a rough month for the S&P 500. And sometimes traders miss stuff like this because they simply don't have the right tools. And this is a quick pitch, but my company, A1 Trading, we build software tools for traders, especially traders that are trying to get more into macroeconomics, trying to get into fundamentals, but don't want to be overwhelmed by how difficult they are perceived to be. Fundamental analysis, looking at the market through the lens of like economic data, as well as seasonal trends, and the commitment of traders to track what institutional money, doesn't have to be hard. It sounds tricky, but with our tools, the whole purpose is to bridge that gap and make it a little bit more approachable, so that the everyday trader who's trying to get better at this stuff, but knows fundamentals are important, but doesn't quite know how to get started with them, can use a tool, a playground, if you will, that gets them looking at the right stuff very quickly. So for example, we referenced earlier the commitment of traders data, which will allow you to look at what week to week institutional money, what are they buying? What are they selling? These guys have a ton of money behind them. These are hedge funds and banks and institutions, all those sort of, big players at the table. The Edge Finder helps us to visualize what they're doing. It helps us to look at the put call ratio, which shows you a bird's eye view of the options market. Are people buying puts aggressively? Are they buying calls? And that tells you market sentiment. So we do sentiment studies. We do seasonality studies like I just referenced. So when we're looking at, the seasonality of the S&P 500, these are huge things that can save you a lot of money. I closed out of some of my longs on the indices, and just by doing that, I saved myself thousands and thousands of dollars. I did that with the help of the tools that we use here every day on stream, the Edge Finder. So I just want to make that quick pitch why these tools are something I think every trader who wants to incorporate fundamental analysis into their trading should be using. And if you don't have a copy, the Edge Finder is currently, for today only, this is the last day. We extended it through NFP Day. It is currently 35% off, guys. So if you would like to get a copy of the Edge Finder for 35% off, here's a quick list of data about this. The Edge Finder is 35% off. It's a one-time fee to get access to the tool. You don't pay again, just one time. You get your access, and then you unlock all of our tools and all of our updates that we do for the Edge Finder over the years. If you had the chance to ask people who have been using the Edge Finder for 2 years, however long we've had it out available to the public, they've watched the tool transform and improve every month for 2 years, and they just paid one time to get access. So if you don't have a copy of the Edge Finder and you'd like to take advantage of that 35% off on NFP Day, our NFP sale will be going through the end of the day. Get 35% off using that link by chatting directly with a member of our staff. They can answer any questions you have. You can pay with crypto. You can do payment installments. Just chat with them, let them know your situation, and they'll be happy to help you get set up with a copy of our tool. So there's my quick pitch. It is worth the money. It's a great software, and we work really hard on it every day to keep improving it for traders. So where are we at with the S&P 500? We dipped lower initially, came back here about flat on the day now, following a couple days of selling. We'll see where we end up today. I'm very curious. Gold is now actually, sitting just around the all-time highs, but we'll see if that can really make a big substantial move one way or the other. I'd be curious to see if today we can end above resistance. That would be a very good sign and a trigger for me to go ahead and start trailing my stop loss into profit. So I'm watching that. Definitely going to keep an eye on that. All right, guys, we're going to take a quick break here. We will be right back in just a moment with Kenzo to talk a little bit more fundamentals to see the reaction he has to the NFP report this morning. Stay tuned. We'll be right back with Kenzo after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, guys, and we're back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great. Thanks, and you, man?
Doing well, and we're back here, of course, for another Friday session, taking a look at some of the economic data, talking a little fundamentals. And man, Kenzo, these numbers were kind of crazy. What's your reaction to the NFP report this morning?
Yeah, I thought maybe the number was going to be quite positive, but I think it's not really that bad. It still shows a cool off actually in the job in the employment change, but it's not really bad as maybe we thought, because I can see the hourly earnings there. I mean, hourly earnings, it's much better. Unemployment rate, not really that bad. Even yesterday on the jobless claims, they were not really that bad. So I think that we will see the market starting to go a little bit up. on the Nasdaq side. And I think now it's we can confidently say, yeah, I think they will cut the rates. I think some people, they start to say maybe 50 basis points, but I just believe that they will just cut the rates. I don't know what size are they going to use, but I think now things are much better because we were all panicking. We thought maybe it was going to be like aggressively lower, or I just wanted it to be positive, but at least it was not really aggressively lower.
Sure. Well, Kenzo, I don't know if you saw they also revised the previous one. This was what made me a little bit nervous about it.
Yes.
Check this, look at this. So if we take a
That's
look
crazy.
at the revisions, they actually revised last month's, which caused a little bit of concern out there, was the 114,000 jobs added, caused the markets to go into a little bit of panic mode, and they actually revised that number down to 89,000. We did see 142 compared to 164 expected. So I think at least on the jobs added front, it was a little bit rough. The point that you're making, though, is worth mentioning, that 4.2% not coming in higher. We previously saw 4.3. It is a good sign that we didn't see that one jump up to like 4.3 or 0.4. If we saw 4.3 or 4.4, that would have been just horrendous, right? So we're seeing less jobs added, which is a bit concerning. We see wage growth going up on a month-over-month basis, which, inflation's not really the key concern anymore. But that's kind of a lesser point. But you have this number, which is okay, and then you have this number, which I would say was not good. So you're kind of getting a mixed report. One thing I was making the point of earlier, Kenzo, was this number on paper for me I would have expected the market to actually dip lower. But the thing is, maybe because we've already had a couple of days of heavy selling going into this, and the jobs data this week has been pretty poor, perhaps the bad news has already kind of been muted a little bit from the earlier reports this week. Do you think that makes sense?
Yes, you're right. Actually, the market already priced to that. It's like everyone was expecting the lower numbers, and already the market did sell. I don't think we still have that room for the market to sell, even though it seems like we have some other structures that might look like support. But I think the market already priced to any bad scenario. But now, when we check NFP, I can say it seems to be balancing actually each other out, because we have the other number which is negative, or let's say lower, and the other one did not really change, which means the employers are not really firing much, and actually they are not really hiring that much, but the hourly earnings or wages, they are actually going a little bit higher. So which means there is a balance. It's not like maybe the over hiring or maybe firing. So it means we are moving on a very balanced line, which is good. That's why maybe we will see maybe dollar index also trying to reverse, even if it's not going to reverse aggressively, but it might reverse. But it might be a different thing on gold. Gold might actually get confused and might just consolidate actually.
Yeah, I was going to ask you next about the dollar index. So dollar index has been trending lower for a few weeks here, really struggling to find any consistent buying, right? So you're seeing there was this couple days up of green here, but the retracements have been very weak for some time here. I'm curious your thoughts on that. So do you think that the dollar index has a chance of potentially bottoming around 100.5? You think, maybe this chart has gotten a little extended to the downside? Are you looking for longs, or are you more looking for shorts from here?
Yeah, I think with the balanced number from NFP, I think we're gonna see a nice reversal, even if maybe it's not really aggressive reversal, but you can see that we don't really have a quite bearish structure from NFP, which means even if maybe the market might still be on a downtrend, it will be maybe because we expect the rate cuts coming. I think that is going to be obvious, but I don't think the numbers from NFP has a bad effect. That's why you can see it's now reversing very quick. Maybe it will reach this resistance, or maybe just to consolidate, but the overall structure, it is still on a bearish momentum, which is fine. But what we don't really want, we don't just want a meltdown. We want it to go smoothly. That will be fine. But if the market melts, that is the problem. But at the moment, I feel like things are not looking as bad. Yeah, on my side, I think the market already did touch the support area. Maybe now the market might just play around, even if maybe to reverse. That to me, it's fine because it shows that the dollar or the currency is not really that weaker, you see.
Sure. Yeah. And Kenzo, you mentioned it earlier about the Fed funds rate cut that is expected to happen later this week. I pulled up the watch tool here just for us to reference. Yesterday, this was looking like a 45 to 55% chance that we would see the higher probability being the 25 basis point cut. So this is the 25 basis points, and this is the 50. Yesterday, we were looking at a 45% chance. We've bumped that slightly higher up to a 50% chance. So maybe that's why we're not seeing a ginormous reaction to NFP here, simply because this has shifted, but only mildly. We got a lot of weak labor data here this week. ADP, JOLTS job openings, mostly unimpressive this week for the jobs market. But the question now becomes, was NFP enough to really sway that vote further? And it doesn't seem like it made a huge difference. It did make some difference, but it more just reconfirmed what we saw this week, which was the jobs data is showing signs of really weakening. And it's very possible now that the Fed could cut 50 basis points. But I want to get your thoughts on something too. If the Fed cuts by 50 basis points, personally, I'd be a little bit worried. I would actually say that a 50 basis point cut could be a little bit worrisome, could be a little bit concerning, whereas a 25 basis point cut would indicate that the Fed feels okay. Would you agree with that? Or do you think a 50 basis point cut could also be okay and bullish? What do you think?
Yeah, at the moment, I think it's a bit confusing, but I can say I believe that they will go with 25 basis points. The thing is, next week, I think we're going to have CPI. Let's hope it's not going to go crazy lower because that can also trigger like fear in the market. But at the moment, it's fine because the most important one was NFP. But if CPI and retail sales, because they're going to come before interest rate cuts, if they go aggressively lower, that is going to also create another panic. And that will end up being like that. That's why I see 50-50 there. It's like now we don't really know which one they can choose. I think they can choose whether 50 basis points or 25, and it will make sense because everything is just cooling off very quick. So I think at the moment on my side, I feel like Federal Reserve, they are actually late this time. I think they were supposed to cut actually last month. If they did cut with 25 basis points maybe last month, I think we were not going to be in this panic mode at the moment.
Interesting. Yeah, no, that's a really interesting take because then it makes that's been a I saw in the meeting minutes that they had actually mentioned that some committee members felt that they should have cut in July. And so very interesting to see that. And then you've got a couple weeks here to go before they make the decision as to whether they're going to cut now. I think that this jobs data that we've seen this week makes a pretty good case for a possibility of 50. But other areas of the economy, like you still have GDP growth that looks pretty good. PMIs, came in decently well for services this week. Manufacturing was weak again, but there's enough there that maybe the Fed feels that they can get away with 25, but it's actually coming down to the meeting. It feels like it doesn't feel like we have a clear picture. I would have said a week ago, 25 basis points for sure seems pretty likely, but with this week's labor data coming in so soft, I'm not so sure. Now I'm feeling pretty undecisive about what I think will happen. I think that if CPI comes in very low, it's possible that we see something more aggressive, but I don't know. We'll have to see. It's a very interesting thing. What other charts are you looking at right now in the markets? Are you looking at any currency pairs? You got any gold trades open? What are you watching?
Yes, I was looking at gold also. I was expecting to see a nice reversal, but it seems like at the moment it's still struggling. But I like the fact that it's struggling to break my resistance there. So I will wait and see. Maybe once the market opens, maybe we will see a reversal. But the overall structure, it's actually a nice bullish move. So if the market is on the support area, I will definitely look for that buy or maybe around this level. But I don't really think we will reach this area. Another ones were just my currency pairs and Nasdaq and US30. US30 seems to be struggling a little bit, but at the end of the day, we had an area that I think maybe the market will be pushing up, because when I check, US30 was not really affected by Nvidia earnings that much, so it seems like it might reverse also. But on top there, we also have a major resistance. But since we're gonna have some rate cuts coming, whether 25 or 50, I still believe that we will see some very new highs. Another one, it's just currency pairs like GBP. We had a nice buy, but just because the market is now aggressively reaching the resistance there, we had to get out. But I still believe that we are still on a bullish move. But the overall moves here, I think coming from September, let's say September, October, November, towards elections in the US, I think that is going to be, the market is going to be volatile until they elect the president. And before that is going to be crazy. Besides interest rates, I think we're going to have a rough market.
Yeah, no, I tend to agree with you. And you've seen a bounce back recently on the volatility index, coming down a little bit here today, which would be expected simply because, now that NFP is out, the volatility is going to, retract simply because volatility had the most potential energy, if you will. Volatility is an interesting thing. Once big events pass us, usually volatility drops because people are like pricing in, okay, the volatility is behind us. So volatility index up to, at one point again jumped up to 23. So, during the major volatility that we saw last month, we saw the VIX go absolutely crazy, has come down a lot since then, but we'll have to keep an eye. NASDAQ flat on the day here. SPX, same thing. Russell is just slightly lower. Dow Jones about flat as well. And as you mentioned, gold sitting right back at resistance. I'm very curious. I have a long position on gold. I was looking to see if we can break through the highs, but we've been struggling at this point here for a few weeks, actually. So we'll have to keep an eye to see if gold can, in fact, make a decision here. Is it going to roll over completely, or is it going to actually break through the highs? But kind of a muted response here in terms of the NFP report. Dollar index shot lower, shot high. Well, actually, it shot higher, then it shot lower, and has now come back into kind of where it started. So, bit of a wild NFP candle overall, Kenzo. I think we'll have to watch to see how the rest of the day closes, because if you get something, let's say the dollar index closes towards the lows after the market kind of consolidates and thinks about all the data that came in, that would be very curious. Or if it sees a full-on reversal, that also could perhaps mark a short-term low for the dollar index as well. So I'm curious to see how the dollar closes on a daily chart level.
Yeah, on my side, I still believe that even if it tries to consolidate here and there, I still believe that we are still going to see a weaker dollar index, because whether the NFP was average or whatever, but I think as long as we know that we're going to have rate cuts, I don't think that actually takes the strength of the dollar, because by cutting the rates, it means we're trying to cool off the strength. So it means slowly it will start to go even lower, but mostly dollar index is not really different from gold. Mostly they don't really react they don't really react immediately. They will react those days when they cut the rates, or during those days where there are those events. It's like gold. You see on that resistance that you say it's been holding for a week. It won't react much on the news, but during that day it might go crazy, because everyone at the moment is focusing on NFP and stuff. But during those days, they will react directly to those economic events.
Well, and you also mentioned something else, Kenzo, I thought was interesting is, the market is sort of sitting at these levels, but we already saw a lot of the move for this jobs data play out this week. So what happened this week was we saw weak JOLTS numbers and we saw weak ADP numbers. This jobs data kind of happened all in slow motion. Like one day after the next, we saw the bad news coming out, and then NFP kind of just confirmed all of those suspicions. It would have had a more violent reversal, I think, if the data had come in good, because it would have been a big surprise. But the data coming in bad today, it was kind of expected to be bad simply because the bad data came in all week. So it was like it would have been very shocking if NFP itself just came in amazing when everything else was kind of a weak print this week. So maybe a little bit of a maybe most of the move for the week has happened already, but we'll see. Depends how candles close, and as you just mentioned, sometimes you get the delayed effect, and maybe that delay is in fact the New York Open here, or the New York stock market open, which happens in about 20 minutes. So stock traders will be getting to the desk, and that comes with that is a lot of volatility, and a lot of market volume as well picks up during that session, especially on the indices. So we'll have to see how that goes.
Exactly. Yeah, I think we're also gonna see that. I think everyone is still digesting that, but once the market opens, I think we're gonna see some enough push, especially on the indices, because I think they've been selling for quite some time. Or maybe the overall market, we're gonna see some nice moves after that. Especially it's Friday.
Yeah.
I think the market, everyone wants to close. Everyone just want to make some profits and close out very quick.
Sure. Yeah. Well, Kenzo, thank you for coming on today and giving us some good fundamental breakdown, some commentary on what we saw here with the NFP report. Always good to have you on the show. And before you head out, let me just mention to everybody who's listening, if you guys would like to follow along with Kenzo, he has his own YouTube channel that you can find. It's Extra Hot Forex on YouTube. We'll drop the link to that so that you can go subscribe. And please go do that, because it does help to support our show. We have several contributors that come on to the A1 Trading Show, and their contributions make it as good as it is, just having different thoughts and opinions. So we'll drop that link. And Kenzo, thank you very much for joining us on the show today.
Thank you very much, man.
All right. We'll see you next time. All right. See you, Kenzo. All right. So next up here, let me just switch my thing. I think Chandler stepped out of the room, guys. So I'm going to have to drop the link. I don't have his link in front of us, but guys, Extra Hot Forex on YouTube. Please do me a big favor. Help us out. You can find him on YouTube, Extra Hot Forex, Kenzo, who just joined us on the show. Okay, so we've got couple more things here to think about. So the stock market, the US stock market, opens up in about 20 minutes or so, which comes with it some big volatility, right? Usually a lot of times what happens with these NFP reports is that you get the release at around 8:30 a.m. Eastern time, which was 40 minutes ago. And then an hour later, you get the US stock market opening up, and that's where a lot of the volume steps onto the board, if you will, and pushes markets one way or the other. So we'll see, but kind of a muted response, to be honest, to the overall NFP report. I do kind of lean towards this was a little bit rough for what we were expecting. It increases, in my view, the chances of a 50 basis point rate cut, which can be troubling, right? I kind of lean towards, if you see a 50 basis point cut, it causes concern, because then people might feel that the Fed is behind. They're behind on their goal of cutting rates in time for the economy not to get hurt. It makes me a little bit nervous. We've had a lot of weak economic data this week. Manufacturing PMIs were poor. ADP numbers, job openings were poor. Unemployment claims came in line with expectations. Unemployment rate was in line with expectations. So, yeah, it's an interesting week, to say the least. I do think that path of least resistance for me, in my opinion, is I do think stocks could go lower for the rest of the day. That being said, they've already made a big push lower this week. So we'll see. There's always a potential that the US stock exchange opens and that we just drift higher. But for me, it doesn't really matter because I don't have any positions on the indices at this time. I do have a position on gold, and gold has topped out a bit back at resistance. We're testing resistance, and we'll see if this one can close above today. It's possible you're getting kind of an intraday pullback, and then we could see this thing explode through the highs. I do think that this number was pretty bullish for gold, that it improved the chances for a possible 50 basis point cut, which is that's the play for gold bulls, right? 50 basis point cut would signal, Fed might be behind a little bit of fear comes into the picture. And that, as many of you will know, is the sweet spot for gold. When you get a little bit of worriness in the market, that's usually where gold really shines the brightest. So we'll have to keep an eye on the New York stock market open and go from there. I mentioned this earlier, guys, but if you'd like to get access to the Edge Finder, the 35% off sale is ending here with the NFP day. We extended the sale here through the end of this week for people who would join us on this big show. So if you'd like to get access, there's your fair warning. 35% off ends today on the Edge Finder. Get access to the commitment of traders data, which, by the way, drops the latest. I'm so interested in that later. See what the big money did this week, what they bought, what they sold. That data comes out this afternoon from the Edge Finder. We'll pull it in there so you can take a look at that. COT is one of our bigger interests on the tool. You can keep an eye on what institutional money is buying and selling. Things like the investor sentiment. You get the put call ratio. We've got seasonality data. We've got all sorts of different tools and features. And then, of course, we string it all together with the top setups algorithm, which generates bullish and bearish kind of ideas in the market based on the scoring system that we use for all that economic data. So, for example, unemployment statistics or jobs added like NFP will get factored into the idea or into the Edge Finder's algorithm, and then the ideas will be generated on the output. So it's very, very useful tool for people who are trying to get more into fundamentals. Again, that is currently 35% off. So if you'd like a huge discount on that, click the link being dropped in the chat to speak directly with a member of our team, and don't miss that NFP sale. So there you go. All right. So we will keep an eye on this stock market open here happening in just a few minutes. Got about 15 minutes for that. In the meantime, guys, we're going to be having our next guest take over the show for a little bit. We got Forex James in the house. He's been taking a look at some charts with you. And then we've got more show happening after that. You guys can always keep up with the latest live stream schedule on the A1 Trading website, a1trading.com/livestream-schedule. It is always a good spot to keep an eye on where what our shows are looking like. We put in a lot of effort to kind of coordinate these shows. So if you're enjoying it, make sure to hit the thumbs up button. And also, we'll drop the link here to Forex James's channel so that if you'd like to check him out or check out his website, elitetraders.io, all of that will be linked here in the chat for you if you'd like to check him out or you enjoy his commentary. So stick around for James just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on TradingView.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How are you all doing? Hope you're all having a good Friday. I hope you've not got too many blown accounts as we end the week off some pretty interesting news. So I know Nick's kind of covered this, but I want to, I'll have a look as well, give you my 2 cents. So the CME FedWatch tool is now leaning more towards a 50 basis point cut. So we can see a month ago at the start of August, it was heavily leaning towards a 50 basis point cut at 68%. And sort of recently it dropped. So, you know, a week ago it's 30, then it went up to 40, and now it's 51. So there's a higher expectation of a higher rate cut now. What I'm also seeing is a lot of discussion about whether it's going to be 25, will it be 50, and no one knows. However, I've seen arguments for both things really. So if we look at NFP, the newest release from today isn't here yet. However, obviously this was revised down to 89, which is still very, very low. It's actually, you know, worse than 114, obviously. So if we take that into consideration, you know, this release today has been actually a lot better. You know, although it was still falling short of expectations, it's still definitely not positive. It was, again, yeah, a lot better than previous. If we take a look at unemployment claims over the past year, nothing substantial really. You know, it's pretty stable. Nothing really to look there. The interesting thing gets into now when we get into job openings and unemployment rates. Job openings are declining. We are seeing a downturn in this, obviously signaling a weaker labor market. Unemployment rate is rising, although it's important to understand the 4.3 and the one we had today. Still not alarming numbers, although we are obviously climbing to the upside. So it is still showing signs of a weakening labor market. Wage growth as well is falling off. You know, we can see we're trending to the downside. Again, it's not awful. These numbers aren't, they're not huge alarm bells to say, oh my God, the US is falling apart. But they're all factors to say that the labor market needs a nudge in the right direction. So to be honest, if the CME FedWatch tool is leading towards 50, we are seeing the labor market not doing so hot in a lot of aspects. 50 basis points might be the way that we see things go. And I was a big advocate for a 25 basis point cut over the past couple of weeks. However, that was due to, I think it was last week's positive US news. And then this week has been very disappointing, to be quite honest. So yeah, we'll have to see. Obviously, I could be wrong. We might see 25. And a 25 wouldn't shock me. If we see 3 cuts of 25, you know, I'm not going to be surprised. However, if we also saw 50, I wouldn't be surprised either. Hello, guys. Yeah, I've seen some hello messages. I agree with gold might go down now, but I would not put it now. Too much bullish signs everywhere. Yes. So my plan at the moment for the dollar is actually, you know what? Surprisingly, today's reaction was very, very mild. I really thought we might see a little bit more. However, very, very little. So if you watch my segments on these streams, you'll see sometimes I trade news corrections. So I did it last month on Eurodollar when we had NFP. I was trading the correction. And I often say I trade corrections because we quite often see the market pull back and correct the price. Now, it doesn't always happen. Please don't take that and start trying to trade news. It's just something I do in a very specific way. However, today we've corrected this move. You know, what's it been within almost an hour? Very, very simple. And the days, you know, today's daily candle is also bullish. We had good unemployment data as well. We had a drop in unemployment, so I guess that's helped bolster the dollar for now. However, moving forwards, I am looking to get short. So you'll see here we've got the pound dollar. So I'm a little bit on the edge or on the fence with pound dollar. So I'm just going to pull up seasonality again. And I do this quite often, but it can be helpful. I mean, not really in this situation, because what we see is if we look at, let's just take it from the start of September until the end. This period is pretty bearish. We do have an initial spike sort of in the middle of September here. However, the main move is this push to the downside at the end of September. However, the problem is this is in the same period that we have the rate cuts. So I don't want to rely on seasonality. So I don't really care what happens this month with the pound dollar. What I care about is what happens after. So at the sort of start of October, so around here, I'll start looking to maybe get long. And again, this will depend on what the Fed decides to do. If we are looking at aggressive rate cuts of 50, then I'd be more than happy to start going long. If it's more of a slow and steady 25 basis point cut, maybe not so much. In terms of the S&P, I'm looking to go long here on the daily chart. So what we can see is we've got the fib from low to high, obviously because we are looking to buy. That's how you draw the fib when you're long. So we've had the initial push off this 200 moving average, a really nice correction of the risk off market we saw when we had the sort of brief stock market. I don't want to call it a stock market crash, but it kind of was. You know, we saw a 10% drop quite rapidly. So yeah, looking for a 50% move of this. So around here, so it would be the 5,373 level, and then taking it back up into new all-time highs at around 6,000. I think my camera just froze there. Apologies. Let me just catch up with the chat 1 second. Yep, too much risk to sell. Yeah, I don't think anyone's selling. Or I'm not selling anyway. Yeah, okay. Seems like you guys are trying to do a lot of trading euro dollar and gold at the moment. So I'm still in my euro dollar short. I have been for a while. Sat through NFP. I didn't really care too much. As I was saying on the stream yesterday, it's a very, very short, it's a very, very small risk trade. And I was happy to take this because if I stopped out, not an issue. It's fine. I'm happy to take the stab. However, we've just rejected, I mean, it's news, but we did also reject this this fib level quite nicely, failed to close above, and we are now seeing bearish pressure come back in on euro dollar. Credit Agricole's position is here as well. They're also in short positions. We also have very bearish seasonality for euro dollar coming in on the 12th of September. So that's why I was willing to take the risk with a low position size. How you get the curved line? Good question. I had to Google it actually. I saw someone else use it in Elite Traders, and I thought that looked pretty cool. It looks a lot nicer than the standard arrow. So you need these two. Well, one of these two. You can use the curved or the double curve. It doesn't matter. Click and then drag, and then just make sure you've got the arrow on the end here, and then you can sort of just drag it around, and there you go. You've got a curvy arrow. Come here for the best trading tutorials. How to trade 101 is draw a curvy arrow. James, you're still using your phone as a camera? I am. It's the new iPhone. I refuse to accept that it won't work, so I will continue to use it. To be fair, I've been using it since, for the past 6 months, and it had some problems at the start, and then it stopped, and now it seems to have started again, so it's a bit annoying. Dollar Swiss in buy and UJ buy. You know what's interesting? I was looking at Dollar Swiss, and I may still take it. And again, it's a little bit risky. Again, I'm not too sure really if I want to go in, but similar to euro dollar, I might just take a very small risk here. But you can see sort of during this period from in September to the end of September, it's very bullish, and this is over the past 15 years of data. So just based on seasonality and sort of where price is, actually, let me go to the daily chart on here. You can see it does look in a prime place to buy if you are looking to buy. If you were looking to sell, obviously you need to wait and see a break and retest of this this level. But if we can see, yeah, I'm not going to trade today. I just realized it's Friday. I'm not going to trade today. But if we can see today's candle close bullish, maybe on Monday I'll take a long position. Maybe just go for a 1 to 1.7. Just sort of. Actually, I've just noticed there's a nice little previous support here that's not really been tested yet. It would also meet the 200 moving average. So yeah, I quite like that really. But again, it's quite high risk because the dollar does look quite bearish at the moment. So obviously do your own research before you take trades. Gold will go high to the moon once news comes. Don't talk to me about gold. I'm still really upset. I want to say I'm upset. It's more of a joke, but I am still a little bit salty on gold. My entry was... where was my entry? Oh, it was actually... Oh, it was down here. That was it. My entry was here, somewhere around there. Take profits up at 3,000. And then because of the US news and, well, actually, no, mainly just due to the US news and possible profit taking, I moved my stops to break even. So I was stopped out here, and now we're back to, well, what would have been quite nice profit. But there you go. That, you know, what can you do? I might re-enter if we see gold come down a little bit further back into this level. I'll take one more attempt. Take it live, low risk, do it. Do you use RSI and stochastic? I use the RSI. Is it this one? Yes, here we go. So I use the RSI with the levels of 80 on the upper band and 20 on the lower band. The length is 6. And these settings basically give the most extreme pullback. So I actually use this more for day trading. So if you look on sort of the, sorry, got a stutter there. If you look on the H1, let's say you were following the trend here. So, you know, this is the way I day trade if I am looking to. I'll wait for a pullback to the 200 moving average. Obviously, it's an uptrend. Wait for the RSI to become sort of oversold. So actually, this would have been perfect. So we see a sort of bullish doji, I think they're called. Well, I'm not sure candlestick names. We had the RSI overbought. So following those rules, I would have gone long here. Stop loss below the previous low here. It would have worked out quite well. So there you go. That's why I use it the way I do. But yeah, for swing trading, it's more just to make sure that I'm not buying when it's reading the market's already oversold or overbought. Yen's gone mad. Let's have a look at the yen. Let's get rid of the Aussie. Don't care about the Aussie. Yeah, the yen seems to have gained a bit of strength today, but nothing too significant. Better gold trade than someone else that springs into mid Donvo. Yeah, I won't speak about Donvo. I made a video about Donvo, but that's it. I'm not here to bash anyone. Hi Jay, welcome. Hope you're well. What do you think is a likely daily scenario now on gold? I will go back to that in a moment. My MAs are 50 and 200. The exponential moving averages. Hi James, how much are you paying for Season AX? I think it's $50 a month. I find it worth it because I pair it with a lot of other things. But if you are only getting a seasonal program to trade, use it as sort of signals, it's not worth it because you won't make money. Which is better, RSI or TDI? I don't know. I don't use TDI. I never have. Right, okay, let's get some charts. Someone asked for gold on New York Open. I don't trade sessions. I'm not a short time frame trader, but it looks like we're heading to the downside. So there you go. Expert market coverage there. But yeah, I think, to be honest, I don't have any expectations for gold at the moment. We are stuck in this range, and we have been since the 19th of August. So, you know, not really much to say about gold at the moment. AUD CHF. Yeah, I don't mind this to the downside, actually. If we have a look here, we've got a very clean lower highs being formed. Let's see what we've got. Pretty nice movement off the fib zone here. Also lines up with a small previous resistance and actually a bit of support previously as well. So not too bad on the technical basis. The moving averages are in a downtrend. RSI is looking a little bit like it's going to head into overbought. So I wouldn't mind going long. Sorry, I wouldn't mind going short. Maybe something like this. However, it is Friday. It's post-news barely. So I'm not looking to place any trades, but that's kind of the view at the moment. Let me see if Edgefinder has anything here. Oh, it does. That's nice. It's always nice when you do some technicals and the Edgefinder agrees. We are short. It's reading bearish on the Australian dollar Swiss. Sorry about the camera, guys. I don't know why it's doing that. It doesn't normally do it, but sometimes it'll have days where it just wants to freeze and be a bit annoying. But yeah, we can see seasonality is bearish. COT is flat. Retails are long. Trend, GDP, manufacturing, retail sales. Yeah, looks good actually. I might, I'll add this to my watch list for next week. I'll do some more research on that one over the weekend. USD JPY, should we buy now or sell? You should get off a trading account. If you're asking me if you should buy or sell, you should go back to demo and get a mentor. Sorry to be so blunt, but that's the truth. If you're coming into YouTube videos and live streams hoping to get sort of buy here, sell there type of things, then you're not trading. You're blindly copying someone that you don't know. I mean, I could have blown 12 accounts this year. How do you know that me telling you a buy or sell is good? Anyway, that's besides the point. Let's get back on track. The S&P, I am looking to go long. I would like to see a pullback here. So let's get rid of this box so you can see it. So we've got the fib from low to high, looking for a pullback by about 50% and a continuation up to about 6,000. Pound Australian long. I'm looking at Pound Australian actually here. So this is what I've got marked up so far, and things are actually looking quite good for. Look, why is it doing that? Hold on, let me just. There we go. Maybe that'll work. So Pound Australian, yes, looks bullish. So let me just give me a moment. Let me have a look at some data I've got on the side here. It might take a minute to load, so I'll go back to the chat. People like giving their responsibility to others. That's very true. Because if it works out, then that's amazing. But if it doesn't, it's all my fault. You like my view? Good stuff. I'm glad to hear that. So where are we at? Pound Australian, the retail sentiment is short. So obviously that means a long for us. COT data is bullish on the pound, more bearish on the Australian dollar. Seasonally looks pretty good. Actually, let me pull up. I'll just pull up the screenshot because I've got it here. Here, there you go. I'll put it in the staff Discord. So you can see seasonally Australian dollar. Pound Australian has a pretty nice end to the year, really, from October to December here. But of course, that's not really enough to say whether it's going to be, a buy or sell. We need to do some more research, really. Ideally, I need to find some reasons to sell the Australian dollar. Why are you not using seasonality on Edgefinder? I use everything on Edgefinder except the seasonality, and it's just because the Season AX is designed specifically for seasonality, whereas Edgefinder is designed specifically for data. So it's just two different systems built for different things. Edgefinder's fine if you have Edgefinder. I'm not saying the seasonality is bad. That's not what I'm saying at all. It's just my preference. EuroCAD. I think actually I am looking to go short on EuroCAD again. I just want to see a pullback. Actually, let's see. I'm quite happy to go short here. I just need to see a lower high get formed. So something squiggly line again. Actually, that's the wrong type of squiggly line. We need the different one. We need this one. So I need to see this where we come up a little bit higher to around this fib level, create a lower high, and then I will start looking to go short. However, at the moment, not quite there yet. Again, we are just out of news, so looking for trades right now is a little difficult if you are looking to execute straight away. Obviously, I'm looking more a week to 2 weeks ahead. Now Nick is going to implement that kind of seasonality data. That would be great. You know what, Nick, if you're watching, recreate Season AX for me so that I can cancel the memberships there and stop paying $50 a month. By the way, I'm not affiliated with anyone. I have a discount code for the Edge Finder. It's just Elite, just the word Elite if you want to use that. But for any other software, I don't recommend it. No affiliations or anything. I wouldn't be buying GJ. Yes, I agree. I wouldn't be buying any of the yen pairs right now. I'm in a long-term position on Swiss yen, but again, this is a very long-term position. It's not something that I expect to play out straight away. But yeah, this wasn't my trade either. It was one of my traders in Elite Traders. Your TA on Euro USD was good. Looks like they trapped retails on the top. That position was probably to get good profit. I mean, I don't agree, to be perfectly honest, but if that's the way you trade and you make money, that's completely fine. If we both got the same idea, then fine. If we all good. But yeah, so far it's not looking bad. Maybe I will scale into this one when we get to Monday. We've had a candle close. What's your ideal entry confirmation? That's a great question. Let me find a good example. I suppose we can use S&P as an example here. So what I like to see in terms of technicals, let's draw our fib from low to high. I suppose it wouldn't work here. So we need to find a fib that works. So I suppose this would be okay. So let's take this example. Because obviously the markets are never perfect. You will never have, you'll very rarely have a pip perfect entry or market conditions. So we draw fib from low to high. So we've got the low here, the high here. We'd wait for price to come into this fib area and close bullish. Obviously, if we're looking to buy, and it was here, so we had this bullish candle. So I'd be looking to execute on this candle close. So it might be somewhere around here. Stop loss below, take profit at the fib extension. And in this situation, it wasn't perfect because the RSI wasn't oversold. But what can you do? Again, the market's never perfect. And that's one reason why I'm such a fundamental trader, because as long as the technicals are there enough, then the fundamentals can sort of drive the trade rather than technicals. How many pairs do you limit yourself to? I don't believe in limiting pairs. I think the more exposure you have, the more ground you can cover, the better. So for example, right now, I don't want to trade the dollar. However, I do want to do in the future, but then that means I can go to other assets. So I can start going to some commodities like corn or wheat or natural gas. So yeah, I don't believe in limiting yourself. The more limits you have, the lower the ceiling you can reach, is what I say. I am still in euro dollar, yes. Where did pound dollar? I think I already covered pound dollar, but I'll leave it on the screen so you can see it for a moment. Here. So I'm looking to go long off this pullback to the previous resistance or support. Sort of after October, that's when we start getting some bullish seasonality for pound dollar. Thanks anyway. As long as you don't Donvo, I'll stay in the buy. Okay. I mean, I'm not saying to buy gold by any means, so take any positions at your own risk. Pound Swiss. To be honest, I was looking at this. I've looked at this pair a few times over the past streams I've done here, and it looks okay to short. We keep seeing this rejection of the 50% pullback, but the problem is it's just ranging. We've not seen a clear push to the downside or a push to the upside. There's no momentum here. It's just there. There's nothing here to trade. So yeah, nothing I can really say there, to be honest. Technically, I would still be looking to go short. But again, there's nothing there that really, other than the fib, there's nothing here that matches what I want to see. So yeah, I think that's actually about it. But I've got another 20 minutes. So let me have a look. So I'm still in copper. Copper's playing around a little bit. So that's always fun. Already sort of gave a little breakdown on this one yesterday and the day before, but yeah, entered this one essentially at the top, which was painful, but it's fine. It's a long-term, it's a longer-term position, sort of aiming for to take profits up here. We do still have quite a nice weekly and monthly trend line here as well, so nothing too bad. Still in Australian dollar yen as well, but as I've been saying, this is very, very low risk. It's such a small position size. I don't really care about it too much. I will obviously close out if we do start seeing continued bearish momentum, but for now it's okay. Appreciate the insight, James. Thank you for sharing. You're absolutely welcome. Only the best for the Trader Nick viewers. New Zealand dollar is also one that I'm looking at. Ow. Sliced my thumb open the other day on, I've got one of those, I think it's called a cutthroat razor, where it is just a razor blade in a handle, and I dropped it and it sliced my thumb open. So it's a little bit painful. So I keep banging it. It's a bit inconvenient, to be honest. NZD USD. So similar thing here that we saw on pound dollar, where we have a little bit of a bullish push at the start of September, which we have kind of seen so far, and then we start dropping off sort of towards the end of September, and then we do see this really nice run to the upside towards the end of the year. The problem is that the bearish aspect that we see sort of here is right at Fed cut. So you can see on the 18th of September is sort of, we have this peak and then a drop. So it's a little bit like, you know, do I really want to use seasonality in this situation? Probably not. However, if we do see that situation play out, where we see the Fed cuts come in here, we see the drop, and then we start seeing it rise, then fine, I'll use it as a confluence, but I'm not relying on it heavily. So you can see I've got it marked up here. If we do see this drop to this level of support, then I'll go ahead and buy it back up to previous highs. But yeah, again, it's a very loose trade idea at the moment. It's not set in stone. Can we take a look at GJ? We can take a look at GJ. Sorry, I think I saw you say that before and I ignored it. But to be honest, it's a similar thing on all of the yen pairs. I would love to see a correction of this move that we have up here, but will we get it, and when will we get it? I don't know, and I don't know. I think we more than likely will slowly over time see the yen start to lose some value, but I don't think it's going to be a quick journey. I think we're probably going to have to sit through a lot of sort of this nonsense until we start seeing correction. And for me, I don't want to sit in that. It's not worth my time. Why is the DXY going up? Hello from Indonesia. Hello. The dollar is going up because investors are very strange. It's the easiest way I can say it. No, I'm joking. Well, they are actually. I always say that the people that move markets are the most sensitive people on the planet. They, you know, a little bit of news, the market starts going crazy, and they start buying and selling and doing all sorts of crazy stuff. But yeah, no, the dollar's going up. Let me check, make sure that I've not missed any revisions or anything just before I start talking. I don't think I will have done, but obviously it's better to be up to date than not. Oh, that's next week. No, it's today. Yeah, okay. So what we can see is we had the, actually, let me also drag this to the side so I can do both. There we go. There we go. That'll do. So yeah, we had, where's my brush here? We had the NFP come out lower than expected, but it was still higher. So if we look, we had the revision of 89, which, yes, is a big shock. Oh, the camera's frozen. I hope you guys can still hear me. Actually, let me just put it on the side. There we go. Hopefully it'll unfreeze in a moment. I don't know. We'll see. So yeah, we had NFP come out, a revision of 89. So this is obviously not good. However, that's last month. we've already digested last month. So this, you know, on the surface, maybe this should be a little bit more digested, but it doesn't matter. To be quite honest, this is completely irrelevant now because we've had new data, and the new data that came out was at 142. So if we compare these two numbers, obviously 142 is higher. And again, as always, please excuse the crude drawings. I'm not very good at drawing on the computer. Although, you know, I'm saying it's higher numbers. I'm not saying it's good numbers. So 142 is still very poor. However, it's definitely better than previous. And unemployment was 4.3. Actually, you know what? I'm just going to stop drawing because it's too annoying. So unemployment came out last month at 4.3. It's expected at 4.2, and it came out at 4.2. So that's a decrease in unemployment, which is good. So overall, it's not the worst news for the dollar. And again, the NFP is still lower than what people would have liked, but in relation to last month, it's actually pretty good. But again, in the grand scheme of things, the NFP is still pretty bad. So I just need to clarify that. Let me just catch up with the chat. Hold on. BS, most ruthless savages with double-edged daggers. I'm not sure what you're referring to there. What do you say when a person says fundamental is lies? I think they are the most uneducated, ridiculous people on the planet. And that's my view. Let me just be very, very clear. That's not a view of the A1 trading channel or the company or Trader Nick. That's my personal view. And the reason is because you can say, oh, we've got, I don't know, let's just take, for example, this uptrend. What caused this uptrend? Well, sentiment caused this uptrend. So we have the first layer of trade. I just realized my camera's off there. The first layer of trading. Why do the markets move? It's because of sentiment. It's because people see things that they want to trade. So they will say GDP, unemployment, interest rates, inflation, whatever it is, causes sentiment. And enough people have this sentiment, it becomes a social sentiment or an institutional sentiment, whatever. That sentiment then pushes prices. More people have that sentiment, start buying and buying and buying, or selling and selling and selling. That is what causes technicals. So this trend line, this uptrend wasn't driven because there's a trend line here. Now, there is the other side. You can get entries because of technicals. So, for example, let me give you the sort of counter argument to my own argument, actually. The reason I use higher timeframes is because, yes, although larger market participants generally do use fundamentals, and they are what drive markets, you can also see larger participants don't go on the 1 minute and 15 minutes to get entries. They normally look at the higher timeframes and say, okay, if we've got this daily level of resistance, the chance that more people are seeing this level, the better, because that means there'll be more orders in the market at this level on a daily time frame to start helping price go in the direction they want. Whereas if you go into the 1 minute time frame, realistically, how many people are looking at your support on a 1 minute time frame on, I don't know, the USD ZAR? Probably no one, or like a handful of people. It's not enough people to start moving markets. The only type of large money that's on small time frames is higher time frame algos. And obviously there are other things, but small time frames are obviously a lot of corporate accounts hedging and transferring funds. So it's not really like technicals come into play. And that what I said at the start was probably a bit mean. I'll take that back, and I won't say the most uneducated people. I shouldn't say that. I'll say I think fundamentals are a core thing that everyone should at least have a grasp of. Even if you're not an economist, you don't need to be an analyst or anything. You just need to understand why the markets are moving. Understand, this is what you do. This is what you want to do as a career. So you should probably understand it properly. Yes, patterns are patterns for a reason. They can have entries, but if you pair them with economics and fundamentals of why the market's moving, you can increase win rates. And again, you know, I can show you patterns that happen all over the markets, and they'll probably happen as many times as they don't happen. The reason that a lot of patterns work is because of your risk to reward. So if you took, you know, 1-to-1s or 1-to-0.5s on a lot of patterns, you wouldn't be profitable. Whereas if you take 1-to-2s, you will generally end up on top. And it's the same with a lot of things. It's the risk management that can push you over the edge. Anyway, that's a hot topic. So let's move on, because I could talk about that for hours. And I've only got 10 minutes left. Convinced that NFP numbers are manipulated. I'll be honest, it doesn't matter. If they are manipulated, if they're not, who cares? Nothing we can do about it. The market reacts how it reacts. All we can do is pay attention and do our jobs. So let me just refocus on what I was doing. I lost trail of thought there. Went off on a tangent about technicals. So the indices market, let's take a look. Oh, German 30 looks quite nice, bouncing off the 200 quite nicely. And again, I am using technicals. So when I say they're useless, well, sorry, I didn't say they're useless, but I do use technicals. So let me just be very clear about that. I'm not saying that they're not worth using, because most traders do use technicals. It's just how much do you use them? Anyway. Yeah, I mean, I'm probably not going to buy this, but I don't mind the way it looks. If we can get a nice bullish H4 candle close and engulf the previous candle, that might be okay. But then we've still got this sort of range. You know, this is still a sideways movement on the H4, so it's still not the best, but there you go. And the daily looks quite bearish, really. The weekly, oh, actually, that's a bit of a red flag. It really, if the weekly closes and engulfs the previous week as bearish, might see some more downside on the DAX next week, but we'll see. I know the data for the euro hasn't been too great, especially, well, actually, the data for Germany hasn't been too great recently. The Nikkei, don't really care about that, or JPN 225, Nasdaq, nothing here. I just really need to see a drop on a lot of these indices, to be honest. If we don't see a drop, actually, let's see if yeah, okay. I suppose there's also this fib that could be used here. Actually, I might like this fib a little bit more. We'll see. Maybe next week, if we can see, which time frame is it? Here, if we can see this 50% level get hit, I might take my first long position and just see how it goes, and sort of test the waters. If that's stopped out, the next level is down here, and we'll take it from there. But yeah, at the moment, kind of just waiting. I appreciate that you're looking at each candle. Yeah, I mean, I like to look at as many things as possible. I don't agree with trading specifically just off candlesticks. But, you know, if the more data, generally the better, as long as you don't start getting all muddled up and confused. If you can compartmentalize it and put it into where you need to understand and all that sort of stuff, I think, why not? So let's see. Let me just catch up here. NFP came out lower and revision was 89k on the world. On what world is DXY bullish? I had NZD, USD, EUR, USD, and gold longs, and they are now all in the bin. Well, I just went through the dollar. Essentially, the news actually wasn't bad, really. I mean, on face value, it looked bad, but when you kind of take a minute and think, it's not really. Come to say last month was double digits, this month's gone back into triple digits. As a singular news release, it really wasn't that bad. I mean, again, in the grand scheme of things, still pretty low numbers, but yeah, nothing to really be dumping the dollar for, I don't think, in my opinion. So let me just double think here. Let's see what we've got next week. Actually, I've not not really looked at next week. All my focus was this week. So if there's anything overly important, oh, it's next this week. There we go. Okay. I was going to say, you guys have another holiday in America? I thought you already had one. So we've got GDP for the yen, quarter on quarter. Don't really care about that. We've got German CPI. This could be quite good for the, well, could be quite bad for the euro, actually. The German data has been pretty weak, causing some euro weakness, which is one of the reasons I'm in euro dollar shorts. So if we see the forecast of negative 0.1, that would be interesting. GDP for the UK, don't really care. Core CPI month on month for the dollar, CPI for the dollar. Yeah, CPI will be quite big again as we go into rate cuts. It'll be interesting to see what that comes out as. But yeah, initial jobless claims. There's not too much next week. It's relatively quiet. So Wednesday and Thursday, and that's about it. So yeah, nothing too big. I use the candle wicks as my risk and trade the body. Bullish candles usually print bearish to print the wick, then flip bullish to create the body. It's pretty obvious, to be honest. Pay attention. Yeah, that's basically how I trade. So if we get a bullish candle, a bullish engulfing candle, I'll wait for the next candle to start forming. And when we start seeing that print to the downside, that's when I enter in the long side. Obviously, vice versa if I'm selling. DXY is already priced in. Suggest you do top down, look at the structure, monthly, weekly, daily H4. You'll realize that the market dumped USD, therefore selling levels you entered. That's a good point, actually. The dollar has priced in a lot of bad data recently. So maybe any excuse to buy the dollar might be getting taken advantage of, or even just start closing positions. We've got a pretty strong daily level here. It's been rejected twice now. Well, 3 times. I guess we had one down here, one here, and one here. So it will be interesting to see if we can get a higher high printed here. So, in relative comparison to this high, can we then go and create a higher high and then a higher low? Higher low. We'll see. Yeah, we'll see. Oil up. Let's take a look at oil. I don't know. I'm a bit conflicted on oil. I saw an article today by Citibank saying that they could see oil coming down to around $60 a barrel. And when an institution speaks, I tend to listen. Now, it doesn't mean that I'm going to take their word for gospel, but it's something I'll pay attention to. So I'm more looking towards this $62 a barrel. And if we can get to here, I'll start buying. Bearing in mind, average price is normally around $80 to $82, roughly. So if we can get back to around 82 here, that'd be quite nice. Go long off here. I wouldn't be selling oil, by the way. I'm not looking to do that. I'm more looking to just wait. And if we do get this level, I'll start buying it. But yeah, we'll see. We'll see. There is no they, and they don't trap retails. I also agree with that. Okay, actually, I'm gonna have to look at my camera. I don't know why it's starting to freeze again. It's starting to annoy me a little bit. So let's just go over the Edge Finder quickly, and then I'll head off. I think I've got about a minute left. So we've got New Zealand dollar bullish, Euro dollar bullish, Pound Australian, and Pound dollar. I agree with all of these, actually. I think I'm looking to buy all of these, apart from Euro dollar. The Australian dollar Swiss, also looking to go short. And then the other bearish ones here, I don't really care about too much. So, yeah, we'll see. We'll see. Okay, guys, I think I'm going to call it a day there. I'm not sure who's on next. Let's see. Live stream schedule. So you've got Chris on next. So Chris will take care of you guys. He always does a great job. So everyone, thank you for watching my segment. I hope you all have a great weekend. Again, I hope you didn't lose too much money during news, or lose any money for that matter. So have a great weekend. I will see you all later. Thank you for having me.
If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edge Finder. The Edge Finder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edge Finder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey everybody, happy Friday. Welcome back. Nice to be with everybody today. I know I've been out of sorts for the week with a travel schedule, but back home, back at the office location. So let's get cracking. We are down for the week, meaning like the market has sold off aggressively since Tuesday. Hasn't really made much of a budge since Tuesday. We had an aggressive sell-off day. This is the S&P you're looking at here. Actually, let me show you the chart. How about that? No screen. All right, here's the screen. There we go. All right, so we had our big sell-off on Tuesday. Today, a little bit more to the downside. I see some chop in the SPY this morning. I am watching for the remainder of the day to see if we end up pushing down to this 545 level. That'd be my gamma squeeze I'm looking for. We're looking kind of a bit of a battle royale today between puts and calls, 34 and 33%. So I could see price being pretty choppy to wrap up the week. If we get a little chop, that's good because I have a trade here that makes me money in the middle. I also close out a trade. Today was expiration day, and since we had a nice little push to the downside, I had the trade on the SPY, which was, let me show you that here. I closed this out during I just did a live session, so jumping into this one. So I took the trade for $8.60 and closed it out for $11.70. That was a trade that was essentially a neutral trade, going up, going down. The down wins. The downside wins enough to make me profit. That's a $3.10 profit per contract. On the Q side, same type of thing. The Qs, I took the trade for 1090, and this was a 478 by 480. And the Qs, so 480 to 499 was the upside, and then 478 to 458 was the downside, and we're trading at 456. So actually, I was pretty close. 1090 was the debit. Closed it out for 1760 and 1780 and 1790 based on the fills. So overall, that was around $3 and another $7. So about $1,000 a contract on the SPY and the Q plays. That was just a volatility play for this week. Worked out pretty well. And then also I've got a trade in right now in the SPX that if we just stay somewhat indecisive today, let me go back to this chart here. If we just stay a little choppy today, this should be fine. Yeah, let's see if we can just kind of hang out right around this like 5,500 level. I'll keep a close eye on this one. I just need to see price chop around. I think my sell side is 5460. So if we just stay above that a little bit, we should be okay for some additional profit. I also have some trades running in. This is an ES feed. Let me go back to SPX here. That'll be a reference for me. And then ES feed. So ES is still somewhat choppy. MES trades. This is a hedge that I talked about. If you checked out any of my videos this week, I put on a play on, this was actually Monday night going into Tuesday's trading. What up, dude? Tuesday's trading, where I was looking for a bit of a protection play to the downside. And so I just bought some puts and I stacked them up for November, which is way more than I needed it to be. But I thought, you know what, if September is going to be, one sell off and then a bunch of chop, I'll just give myself time and I'm willing to pay for it. It wasn't super expensive. It was like $1,000 total. But I'm already up on the trade about $800 or $900. I haven't protected it yet. I want to see if we actually push a little bit lower towards this for this feed. Let's go ES. Actually, MES are the hedges. So for this feed, if we get down to like 5450 or 5400, I do like those levels. Let's go to this MES feed here. I have a volume profile, and we're looking at some decent liquidity levels right around this like 54 to 5300 zone. There's quite a bit of activity down there. So I want to see if we can just kind of have this Tuesday a little bit more to the downside here. I'll probably take some profit on those hedges, although it might go slightly lower. I mean, I do see some structure like so with lower highs and lower lows. I don't think the market's going to love it if we actually break those lows or test those lows from August 5th. But I could see us pushing back down for another maybe 100 to 150 points to the downside. Rashan says just everything's manipulation, but those jobs numbers. Well, I mean, I think the job numbers, I mean, you can say manipulation, but it's like, look, they come out and this is what the market's reacting to, right? So jobs numbers this week were terrible. So the JOLTS job openings was a huge miss with a negative revision. The ADP number was a miss with a negative revision. Unemployment claims was steady. 231 forecast. It came in 227. And today, 164 printed 142, which was a miss. And then the 114 was revised down to 89. That's a huge miss. Unemployment rate went down to 4.2, but you have to remember that this also means that some people could just be leaving the workforce altogether. And so our big increase is 3.4% unemployment all the way up to 4.3 within about a 16-month window. That's not a good sign. And, we said this week was going to be employment news that's going to be, sensitive to the market. And the U.S. did not really deliver in a positive way to kind of reassure anything. However, what it did change, and I was spending some time in this morning, it changed a lot with respect to this Fed tool. A lot. So now this Fed tool goes out to December instead of September. And if you look out to December of 2025, this is forecasting that the Fed is going to be down to sub 3%. So here's a 3 to 3.25. Here's a 2.75 to 3% window. That's a big difference from where we had, looking at September being like 3.5. And on top of that, so not only are we out further and down lower with the overall forecasted Fed, now all this can change, but that still gives us an idea of like where the Fed is going directionally with their rate cuts. They're cutting fairly consistently, fairly aggressively over the next year and a half. We look at the next couple of months. Now this changed a lot for September. Are you freaking kidding me? I don't know, but honestly, I'm starting to like be annoyed with this tool. If you were with me this morning from 9 to 9:55, this was down to like 53%, and now it's back up to 63%. This is coming next, not next week. Next week we have CPI, PPI data, but the 18th. So we'll continue to watch this, like jockey around a little bit. But this is a 25 basis points cut. Probability is the Fed still sticks with 25 basis points. But this one was increasing slightly up, slightly down for a 50 basis points cut. It doesn't matter. I think it's pretty certain that the market is going to expect a cut from the Fed. I still believe that if the Fed were to cut 50 basis points, I don't know. I don't know. Of course I don't know, but I don't think it's a good look for the Fed to cut 50 basis points because it shows that they completely miscalculated something. They miscalculated the timing. They miscalculated the severity of how they need to cut. They waited too long, right? And all of a sudden we're on that brink of, numbers are looking pretty sour in the employment market. They're saying that inflation is much better. And going into next week, you can see those forecasts look pretty promising, where the CPI year over year is expected to be 2.6% versus the 2.9. So that's a pretty big chunk out of inflation. And if we do see that, let me go into Edge Finder here. Let's go into inflation data year over year. Let me refresh this for a second. Let's go inflation data. There we go. So we're sitting at 2.9, and if we go to 2.6, that would be the first time in a while that we're actually seeing some decent traction where, yes, it's been, trending lower, pausing and getting a little bit stickier on inflation data, but 2.6 would be a decent chunk. That'd be like right down here. That actually would see a sharper move down. But what is happening to also help that? Softer jobs market, little pullbacks in the stock market. So things are getting a little bit slower. The contraction is starting to take shape, and making progress in inflation is fine. But what is being sacrificed, we're obviously softening the labor market. So there's that going. And then on the flip side, you have the market came out of the inverted yield curve for the first time since 2022. If we go into the, let's go interest rate yield curve. You go into the yield curve. So the 10-year bond and the 3-month note, that's still inverted, but the 10 and the 2-year, let's go 10 and the 2 and compare that. So the 10-year is at 3.73, the 2-year is at 3.72. This is now disinverted. And as we've mentioned in the past, if I go 10 and 2, 10 and 2-year chart, there we go. There's my Fred website. If we can zoom in, if actually I'm going to zoom out first, because it's not necessarily when we go inverted, it's when we disinvert. That's what is bad. That's typically what is bad. And that happened this week. So it's not necessarily when we start the inversion, but rather when we get out of it. So invert to disinvert, invert to disinvert, invert to disinvert. Same thing here, briefly during COVID, and then invert to disinvert. So we don't know if this stays up, and we certainly don't know how to correlate this with, stock market. If you show a comparison here, stock market was down, stock market was down, stock market was down, stock market was down, stock market was down briefly, and that's the question mark. Are we going to see stock market down because of this disinversion? Maybe. Not sure, right? So, I mean, history for 30 to 40 years has shown that this disinversion is not a good thing. We just don't know if you can kick the can down the road a little bit further. It's quite possible you can. We've seen a lot of can kicking over the years, and possibly this is another example of that. So as we look in current price, I mean, I think that it's going to take a little bit of effort to see the market take out this August low, and it's going to see a lot of effort, or it's going to take a lot of effort to take out this all-time high. So I could see us dealing with this for the next, let's say, 30 to 60 days until there's other catalysts, right? We still have to get through inflation data next week. We're getting through, I think once we're done with September, it's like, what's in October? We're going to kick off another earnings season. We're going to have the election. We're going to have another rate decision right after the election. And I could see the market just going into way more of a sideways behavior. So on that note, I'll continue to play my hedges as is, probably be protecting them in this zone here. And I want to see today if we push a little bit lower like we are this morning. I do have a trade running on ES, and let me show that right here. Let's go. So SPX. Going to keep an eye on that one for this morning. And then going into my ES feed. Let's go ES. And September 6th. Where the heck are my trades at? There it is. So I have a 54.35 by 75 by 95. I want to keep an eye on this one for the morning. because this is about $150 risk. So 150 risk, and if price pulls back a little bit more or falls a little bit more, this is potentially about a $1,200 profit, give or take. So I want to keep an eye on this one. I would actually like to see that if price drops, I need another maybe 25 points to start getting some nice profit, and then see if my real-time P&L will start to match this this profit tent. We'd have to drop a decent amount. We'd have to drop another 50 to 60 points down for my profit trap to be perfect for today, which may or may not be the case. But I'll keep an eye on this one. I got into it for a $4 debit, $3.50 debit. If I can turn that into a $6 credit, that's 100% return. If I turn this, I mean, this has the potential to pay upwards of like $20 to $30 a credit if the price continues to drop pseudo aggressively. So I will be watching that one for the day. I see fake news, NFP fake news. Okay, that's a flashback to 2016 to 2020. Is that pretty much what was that? Was that a hashtag trending for 4 years? All right. We might hear that during some debates coming up. Let's go oil and silver and gold. So oil beat down pretty badly on some global demand worries. I still like gold, or still like silver actually. What am I talking about? I still like oil. I still like oil, pretty well supported in the mid 60s. I did put a trade in yesterday. I did a trade on CL right here. Let me get back to the table. So I went out to November 15th, and I have a pending order. Where the heck did it go? Here it is. Right here. November 15th. Oh, it should just be working somewhere in the background. What the heck? Working. This trade. There it is. November 15th. There it is. So I have a 65.5 by 64.5 for 50 cents credit. It's basically just a 1-in-1. So if I get filled on the trade, $500 risk, $500 reward, ties up about $420 buying power. Not too bad. It's defined risk. And this also gives me time where if oil ends up finding some decent support, all I'm looking for is anywhere in this support zone. If we spike and go up and spike and go up and spike and go up, that's fine. We can stay in this zone for a while. I'm just looking to see if it's at 65 or at 64. As long as we stay above there by expiration, I'm looking to see if oil has a little bit of a bounce towards the end of the year. Perhaps this is setting up for more of a range. It could be making lower highs right now, maybe. But if we hold this floor, I would almost just say this is support. This is resistance, and we'll see what type of bullishness we can see or some type of reaction off of support. Okay. DXY moving up against metals. Yep. So, I mean, it would make some sense that gold has a pullback. I think we could make a case for a potential rising wedge here. So if you look at something like this, this could be a rising wedge, which again isn't confirmed, but I could see gold, after hanging in here, showing some resiliency, I could see gold dropping, back into this level. This is around 2,300, trying to find some support in here and then see if we can buy the dip, and then gold takes off to the upside. So I wouldn't be surprised to see this rising wedge play out. And it works one of two ways. Either one, we just go sideways, 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 and everyone's seeing this as like, okay, I'll sell gold there, which is the case. Like you sell gold, tight stop loss above, move that thing to break even or better, take it down to a level of support where this whole thing started, where this rising wedge started. And then if we hit support, which is outer trend line support, I like this 2,300 zone, looking for a chance to buy again, buy, stop loss, and then hopefully all-time highs. And if the flip side of that is we don't have a breakup, or we don't have a breakout to the downside, we have this rising wedge. Rising wedges can also do this. They can lure us into thinking it's got to go down, and it goes sideways, but it doesn't break any support or floors, and all of a sudden it just goes up higher, blows this top off, and then we're going higher. And so all this is doing is accumulating more, consolidating more, which we've seen happen, right? Consolidating. So that's all gold is doing, is going sideways. We may not have a chance to sell it. It might just be, stay patient, accumulate. We get a breakout to the upside. Okay, fine. We can go with it, right? So I do want to keep an eye on gold for that level. Let's go to gold futures, same type of thing. I've got some credit spreads there. Silver, I'm still long. Silver, I'm looking to see if I can get a breakout above. I'd like to see silver breakout above $30.50. I would be looking for. Actually, you know what? Let me see if I can do something here. I don't know how far out I can go on silver, but maybe I do a silver call option. Let's find out something here. Let's go silver. If I did a February, I don't think I'm out far enough if I did this, but I am curious going into, I don't know, maybe SLV is a better play. SLV might give me a better expiration. Yeah, I mean, I can go out to January 2026 on SLV. Let me take a look at this one instead. This will be a little bit cheaper with some more upside potential. So 26 on SLV. If I bought like a $30 call, let me see what that's going to cost me. It's going to cost me $3 to buy a $30 call. Right now, if that was at the money, we'd be trading for about $1.40 more in profit. And I give myself time on the trade. And obviously, if we go higher than that, there's max profit on that trade. My measured move on SLV would be up towards the mid 30s, which would be even more profit, I suppose. So if I have a low to high, let me draw this box here. So low to high and higher low to higher high. So if I buy a $30 call for $3, that measure moves around 32.98. I'm not necessarily getting the intrinsic value of the trade, but I'm buying enough time that I see the increase in profit by, I could probably see like 100% profit on that. I don't know. I think I'm probably early to that play because the reality is if I take a look at XAG, I think I just need to wait. I mean, if I want to get more aggressive on call action or call side trades or, in the money credit spreads or whatever, trading futures as well, it'd be nice to see that we're just making a run. So either we continue to consolidate here and kind of accumulate, past resistance becomes support. Maybe there's a bit of a bear trap at this trend line and then we snap back up. I like that trade a lot. So rather than waiting for like a 30 to 30.50 breakout, maybe the better trade is we hit this 26 zone. We fake out to the downside, which would be fine by me. If we, sit here, maybe test 26, maybe test the trend line, bear trap scenario, then get long, look to see if there's some legs in that trade. So there's a bit of manipulation around that 26 handle, 25 handle. I think that's fair to keep a close eye on that. But I do like silver a lot, and that's one of my bigger plays for the year. If I go into, let's go into some positions, symbol. SI, so right now up about 3. Let me go to the whole account here. So if I go SI, up around 25.50, break even on another one. These are all credit spreads for the rest of this month, which sits at like 26.25, 25.50. So we'll see how those play out. Should be some additional decay in some of those credit spreads. And then SLV, one of my better positions, currently up around $32,000. So SLV is built pretty nicely. There's still more that I want to add to it, and then SI is just kind of the cherry on top. If I can add in some futures exposure and add some additional profits to boost that overall gain. Let's see here. Where's my MO at? I saw that was trading like 54. Yeah, 54 still up 83 grand on MO. I want to kind of roll it and keep collecting some dividends on that. That could be a good play, but I don't really want to increase the cost basis. I might just do it at the beginning of the year instead of I don't know. We'll see. See if the expirations fill up a little bit. Check for profit on RUT. That was already done. I don't think I have anything on RUT. Nope. So my RTY trades, RUT trades. Let's check those up here. So RTY, that's up around $1,000. Okay, fine. RUT, I don't think I have anything left. Those are all both profitable. All right, cool. Under Armour at 755. Let's go. I think that was up to $8. It's faded a little bit. Hanging in with Chewy. AT&T, I own some shares of AT&T, and this is not something to get excited about, but I have naked puts and credit spreads and some shares, some dividends. I was considering on a couple of accounts just to take some profit, but it's also like a 5 or 6% dividend. Let me go to AT&T for a second. All right, let's see if we can bounce off that 545. So I mentioned that 545 this morning. We're making a run for it right here. Let's see if we get a bounce. If from here to here we get a bounce and then pull back. If we do, that should still help my SPX trade this morning. Let me take a look at that ES trade that I had from yesterday. So right now, analysis. Okay, so my 35, let me see what that position is looking for right now. So if I were to close this one, hey now, I took this trade for a $4 debit, showing for an $8 credit right now. There's still plenty more to go. So if I show the position 35, 75, 95. Trading, I mean, I'm up about 100% on the position right now, which is fine, but I'm more interested in looking to see if I can really nail that profit here. So we're now getting to that profit trap. Does everybody see that? So this profit trap right here, see if we can continue to head a little bit lower. And also want to take a look at my, oh yeah, this is good. So if we can just go a little bit lower, let's take a look at the expected move on the day. Let's go close, full, table. Oh yeah, there's plenty. Oh, this would be freaking sweet. If the expected move on the day can actually push down here towards the lower end, that'd be closer to that profit trap. That would be my kind of peak price. And if we get into this zone, I'm going to be watching this for. I think my max profit's going to be around $40 credit. That would be, right at expiration. That's going to be tough to nail. But if I can get this thing at, 20 to 30, that would be roughly a 5x return or a 7x return, which is also pretty darn good. So I'll keep an eye on that one. There's that. Take a look at SPX here. All right, we need to see a bounce. 460, which means my stop's around 920. So probably need to put in a limit order to stop this thing out if it's going to bust out. So let me change this order. 9.20. This will be a stop limit. Okay. And same thing here. This was 445, so that needs to be, what is that, 890? Replace. Let's go 8.90. Stop limit. 8.90. All right, so keep an eye on that one. If we bounce off this level, then that credit should come back in my favor. But if we go lower, I need to stop out and cut that loss out and then see if I can just get that hedge going. So one more trade I've got that I want to pay attention to would be on my MES trade here. So these hedges right there up around 8 grand. This is good. Now up about 11. It was up about $1,000 earlier in the week, then back down to like 700. Now it's up 1150. So that's pretty decent for a chunk of profit. Let me go to the MES feed right in here. Trading at 54.80. Yeah, this is good. I'd like to see this slide a little bit lower. I have plenty of time on this trade, so it's not like I'm in a huge hurry to manage it, but my initial target was going to be right in here. So if we push a little bit lower, I will probably be protecting some profit, maybe around $1,500 per account. If somehow this surprises me up to like 2 grand, that's good too. But I'll just keep an eye on that for the rest of today. This expiration is out to November. All right, so I know I'm just doing a lot of talking and rambling here, but let me know what you want to take a look at. We looked at gold, we looked at silver, looked at oil. Bitcoin is dropping, pretty hard. We're at 54.7 right now. I look at, this is an interesting chart here. A couple of my videos I posted through TradingView and on my YouTube channel. Oh snap, we got TLT making a rip to the upside. All right, bonds. So that's also another position that's working out pretty nicely. MES, we're kind of getting to some open space right here. So I'd like to see if price can travel down to this level. That's open space that may want to revisit this cluster around 54 to 5,300. That's likely where I'm going to be taking some profit on the MES position. And also on TLT, we are breaking this recent high that we saw back in early August. That was actually the August 5th bottom in the market and top here. And you can see that bonds are trying to make a run to the upside. I'm not upset by that at all. This is a pretty open space around 100. So I think we get through the 100 handle pretty easily. And then to the upside, there's really not much to go on. I mean, this is the big liquidity level around 94. We have runs maybe into 102, but I like all this price action. You can see where all this is choppy back around this like 105 to 107 zone. I do have a diagonal spread on TLT. I'll show you that right here. TLT diagonal spread. Let's just go to this account. Let's go TLT. So right now, TLT is up around almost $15,000. It's fine. I mean, I didn't go heavy on TLT. I just did a couple of contracts. So the 82 by 103, my cost basis is like $13. I'll do the math on this. So if I have an 82 by 103 and I paid, let's say $13, I think it's like $13.50. So that puts my break even around 95. I get it called away at 103. That's $750 a contract times 300 shares. So I get $22.50 per account. So I'll make a couple $1,000. It's like a 1% little play on bonds. I could also, I mean, this is out to October 18th. If we're above this, all right, I just got knocked out for a debit. All right, so that was a target. P&L was going to be 70 cents. Took a loss of 4.60. Okay. 460. All right. So that trade is done. Watching my ES hedge, my butterfly. These are my TLT trade. So there's nothing I have to do on it right now. I will say that I may look to roll if I can roll. Let me see if I can do this. If I look at the 103 right now, if I look at the 103 on TLT, that is a 103 sell call. Now, the trick is if I can roll it out in time and up in price, that might help.
Hey, Chris, how's it going?
Frank, what's up, dude?
How's your time in Florida?
Yeah, it was good, man. It was really good. It was just busy, and when I'm not at the usual workstation, it's never quite the same. I have 2 little monitors versus having 4, and I was in and out of meetings and stuff all week, and yeah, but it was good. It was really nice to be down there. To get out of Utah for a couple of days, but I was ready to come back and got back last night around like midnight. So, how's your week, man?
It's an early day for you too.
Early day, that's right. Every day is an early day at 5:30 a.m.
Yeah, I'm good. I'm a little confused. So I was talking with Nick about it too, but
Okay.
the NFP got revised so much lower.
Yep.
But I guess the job participation rate went down because unemployment rate went down.
Okay.
But the initial reaction was, it didn't tell us much, and now we're taking out the lows of yesterday and Wednesday.
Yes.
But I'm surprised that the VIX is not moving, and that's the play I have. I have a call on the VIX at 17.
Is this your 17 by 60? What'd you do here?
This isn't a vertical play.
Okay.
When we talked about this, was it earlier this week?
Yeah.
I think, yeah. So we talked about either vertical or just a straight call, and you were like, just eat the extra like 30 cents or whatever.
Yep.
On a call.
Yep.
And I agreed with you. So I ended up taking that instead of another vertical play.
Okay.
And I am doing okay on it, but the problem is that I don't know why the VIX has not moved after we took out these lows. Is it just not a high volume day, or what's going on?
It could be that. I mean, and also just give it time, dude. I mean, if we start to slide a little bit lower, like that volatility index will probably elevate. We have a new week of trading next week. It will probably get back up there. I mean, look, the VIX is a weird instrument, man. It kind of does whatever it wants. It's hard. Like it's hard to gauge, like, days like this where it's like, how the heck does it go up, 300%, and then other days where it's like it's up 20. What was this, like a 25% day on the VIX? So from 15 to it's up 30% on the day. So I mean, today it's looking like the VIX is certainly trying to participate with more bullishness for it, which is why we're sliding in the stock market. But what's your time horizon on that like $17 call? Only out a couple weeks, or how sensitive is that to time? October 2nd. Okay. I mean, yeah. I mean, look, dude. I think if we have this, we have another sell-off slide. We come into the market. The market's clearly on its heels and even backpedal even further. I don't know. I wouldn't be surprised if we're at the. I mean, if you're in at 17 for like a $2 debit or $2.30 debit, I could see us getting into like 25 to 28. If we get into 30 plus, it's like there's a good, I don't know, there's a good VIX play in there. But VIX is an incredibly slippery instrument because we're down on the day. If I go to here, like the day already from high to low has dropped around 1.38%. So I mean, we're getting a slide, and if it continues to slide, like don't be surprised, man. The VIX might have an elevated day where it just finds a way to make some fresh highs, and you never know. So it's on the move. At least it's going in the right direction, right? I mean, at least you're seeing the markets going down and the VIX is up, which is what the correlation should be. But I don't know, just give it time. And it's like everything else, it's a hedge, and the hedge essentially is, it's awesome when it works, and it's kind of the price you pay when it doesn't. And the VIX is one of those instruments where it's always a hedge that's kind of tricky to time sometimes, and the value that you're getting on the VIX play is, maybe you get like 80% of the profit. But I'm going to set a chart alarm here for you, dude. If we break the highs on the VIX today, let's go 2330, and then this would be VIX recent highs. So I mean, I'm sure you're going to be watching, but I'll shoot you over a message if I see that level get hit.
Thanks. Yeah. I have another play too that I took this morning.
Okay.
It's on the SPX. I took a 55.45 by 55.50 credit spread.
This is SPX?
So on the SPX, and it's for Monday.
For Monday. Okay, so SPX. Monday. Tell me those numbers again.
54.45.
Okay.
Somewhere around here.
And that's what? That's a buy put?
It was like a sell call vertical spread.
Okay, so where's your buy then?
The buy is at 55.50.
That's a buy call?
Yep. And then I took a sell call at 55.45.
All right. So you have two legs in the trade, right?
Yep.
Okay. Tell me those numbers again. Sorry. Give me the what's the goal of the trade? Is it a bear call spread?
Yes. It's to keep hopefully price stays below this level is what I'm trying to do, so I can collect $1 premium.
Okay. So $1 premium, this can't be. This is like 105 points wide. That can't be right. So what's your? Give me the numbers again. Is it 55.45?
Yep, 55.45 by 55.50.
Got it. Okay, so that's a bear call spread. All right, I got it. All right, so you sell the 55.45, you buy the 55.50. You collected $1.
Yeah.
Okay, so that's $1 with a $4 risk. Expiration is when?
Monday.
Monday. Okay. Well, Monday expiration is going to be what? 7th, 8th, 9th, 9/9 expiration. Bear call spread. Let me just. Here's what I'm going to do, man. I'm going to take a look at the. I got to keep an eye on this. This is a butterfly spread that I'm going to try to grab. I don't know. We're in a nice little profit zone here. I'm in my profit peak, which is nice. I'm up about 100%. Let me see if these are both up 100%. I'm sorry, I'll get back to your SPX in a moment here, but let me go to this next one. So I pinned it at 54.10, 40,
Is
and
this
40.
S&P futures?
This is an ES feed, yeah. So this is S&P futures. Got in for 350. It's currently trading. Where was that one at? That was 10. So 10 here and 50. If I analyze this trade, so we're just off of the profit, but I got in for 350. It's trading for around $8. If I can take the profit now, let me see what that is. So this would be make about $400 on the trade. If it goes a little bit lower, this gets even better. So I think I'm just going to let this chill for another like 15 to 20 minutes, hopefully. All right, let's get back to XPX. So the first thing I'm going to do, Frank, is go to Monday for you. And let's look at Monday's expected move. Okay. So you're at a 55.45 call that you sold. You're at a 54.50 that you bought. Right now that's trading for 255. Yes, you want to see price go lower. I mean, this is the reality. Can you see my expected move here on my chart? This red area?
Yeah.
So,
Kind of.
I mean, the further it goes down today for you, the better, because that would shift the expected move lower. And I also could see like Mondays could start out with a low of the week. And so I think today you're going to want to cheer on like a decent move lower than your current sell call strike, because that would move this whole expected move down lower. And then if we started low for the week, you might see some nice profit. So when you took this trade originally, did you take it like out of the money? Because right now it's trading for like 260.
That's weird. Because this is
If
trading
you only got
for
$1,
45 cents now.
It's trading for what?
45 cents.
So did you is it a debit or a credit that you took on this trade?
It's a is it a debit?
It sounds like it's a debit if you're seeing $1 and it's now trading for 45 cents.
It's okay, so if I sold the 55.45 and bought the 55.50, that's a debit.
Check those numbers again, dude. You're like 100 points off. Did you sell the 54.45?
I'm saying the numbers wrong. 55.45.
55.45. Okay, that's way different, dude. All right, you're way out of the money then. So 55.45 is way up here, and 55.50 is way up here. Okay, if you collected $1 on that, Frank, and it's now trading for 10 cents, dude, I mean, you're up 90% of the profit already.
It's down to 43 cents.
Okay. So I see it trading for 10. If I have the numbers right, you sold the 55.45, you bought the 55.50. That's $5 wide. That's a credit spread. That's way out of the money. And if you look at my screen here, this is, if I had this right with you, the expected move is here. So you'd have to have price do a massive reversal to even threaten your position. So if you collected $1 on that, and it's trading for 40 some cents right now, coming into Monday, that's probably traded for like 5 or 15 cents. You can either take the profit or just let it expire worthless. The probability is that trade is going to be totally fine for profit, for a little income grab.
Okay.
Yeah, I think that looks
Yeah,
good.
I can't close it today, but I'm happy to see this harsh move lower just so I can start up at least. Give me some wiggle room on Monday.
Yep. Yeah, I'm gonna get.
What are you looking at?
Yeah, so I'm gonna check this this butterfly trap that I have, because I've got the profit tent working for me. That little profit trap is working nicely. So here's real price. Here's my profit trap. I have a $4 debit on this one that's now trading for about $8 and change credit. This is looking better to maybe drift a little bit lower. The closer this gets towards expiration, the higher this gets. The problem is I've got to roll out of here around, actually it wouldn't be too bad. It's around 3 p.m. Eastern time, but actually around 2 p.m. Eastern time, I'm going to be leaving the office. So I'm just going to let this do its thing. Like if we just hang out and hang at the lows, or we push lower, I mean, it can go lower and then maybe whipsaw back and forth, but I might get really lucky and have like a 10-to-1 reward to risk on this butterfly. So these both expire today, and it's just about profit management. So what I could do is move my stop. I kind of hate. Say that again.
Where's price currently, and then where's your like mid price for peak profit?
Yep. So I pinned this trade at 54.35, and current price is 54.45. So if you see my graph here, this is real price. Okay, right where I'm putting that giant yellow. So this is real price. This is my pin at 54.35, and then for the rest of the day, this is my small risk, my profit trap. So what this is showing me is I have a max profit here around $1,600 for a trade that cost me about $150 max risk. So what I could do is protect my profit. I'm sitting here up around 125%, but this idea is I want to try to make 1,000% if I can, because if I can make 1,000%, then freaking sweet. Like I will, take that very small risk, have a huge profit trap. So I think the reality for me is if I see this trading up close to like $1,000 profit, I'm probably going to protect it. That way I can, not worry about trading all the way to closing bell. If it stays in the profit trap, this gets, pretty nice to the upside. What this should be doing towards the end of the day is right now this shows about $12.50 a profit for that $150 risk. So the thing I'm looking at taking away from this trade right now is I'm in my profit trap. I need this to be like solid towards expiration. And so my goal is just to manage profit all day, not doing anything, not forcing anything. But if we, stay where we are, go a little bit lower, that's just, I just want to stay in the green. If it does, then hopefully this gets into like, $15, $20, and then it adds up pretty nicely. And I'm going to watch both of these trades for hopefully a nice win.
I like that trade a lot.
Yeah.
Butterflies.
You and I should talk more
really
about them. We should talk about these more. There's a whole mechanics to it that I'll tell you this. I don't love losing a lot, and I tend to take some paper cuts on butterflies, which I don't love. But there isn't a single option trade out there that offers you, a really defined risk that's pretty inexpensive for a potential, 9 to 10x return on every setup. So you don't have to win a lot, but if you can find a way to win, 30% of the trades, 40% of the trades, it moves the account in the right direction. And it's not that hard. It's actually like quite mechanical.
How far out? Sorry. How far out is the spread?
I did 40 wide. So I pinned the 54.35 was my -2. So that's the strike I'm selling. And then I went 40 wide. So I did a 53.95 and then a 54.75. That's my +1 and my +1. So I did 40 wide.
$150.
Say what?
It was only $150 for that trade.
Yep, pretty much. It was a $4 debit. So it might have been $200, but I think it was less than that. Let me check. If I take a similar order, yeah, max lost $200. Yeah, $200. So it's the 5 because it's ES, so it's a 50 multiplier.
Okay.
Yeah, so it cost me $200 max profit, and right now let's go into analysis, and right now looking. Let's see, that should be trading. Yeah, showing like 10 and change right now. So this is getting better and better here, Frank. I mean, I will keep a close eye on this one probably until noon Eastern time and see if this gets up to, if I'm up to like $15 or $16, that's a pretty good return. I'd like to try to turn this into $1,000 if I could. So if this is, well, it's a $4 debit, right? So it's a $4 debit that's going to cost me $200. And so if I want this to be $1,000, I need this to be trading for probably, $16 to $20. If it's showing a credit of $16 to $20 down here, then that's going to be about $1,000 profit, and I'm going to try to take that off the table. So yeah, it could work out pretty nicely. And on both these trades, it could work out great. I mean, I might get very lucky and get close to my pin price on one of them, and then get lucky on the other one where it's moving into that profit trap. So here's the other one where I pinned it at 54.10 and went 40 wide. And so there's that trade. If I analyze that one, if you can see my green flag is real price, that's real price right there. This is my profit trap. So if we continue to move lower, this one also just gets better and better. I traded this one for 350 debit, and it's right now trading for 1090 to 1150 credit. So that's also up just shy of about 250%, maybe 300%. Same thing here. Maybe get like a 4X or 5Xer. Let's see if price can just chill. So I think by noon, 1 o'clock, I might be looking to take some profit off the table, and I'll see where this credit's sitting. But that'll be the play for the day.
Another idea I was thinking of is, so when we were expecting high volatility this week, I'm guessing the same maybe for next week. Taking out of the money puts, those have worked out. Out of the money puts or calls, I feel like leaning towards the put side though, because price doesn't necessarily have to hit your price. You can get something for like 5 cents, and currently I have a 442.5 put on the Qs that expires today.
442.5. Okay, so 442.50, and that's a long put.
It's a long put.
Okay, so that was a long out of the money put. Yes.
And today it's at 20 cents, which is like a 300% return on your money. So if you get a good move, you can make that much. Or if it doesn't move or doesn't really move that hard, you lose 5 cents on this trade. So looking at out of the money plays,
yeah,
we're talking about labor data and inflation data coming out. These could be like good calls if they work out, obviously, but
yeah.
I think they're good in the sense that they're cheap. And if the market moves down and it's like halfway towards where your price is going to be, you'll be trading for like 300, 400 times where it's at. So
yeah. What is you said you have this one expiring today?
Yep.
So when did you take the trade?
I took it yesterday.
Okay, so you took it yesterday, expires today, and you've got how much profit over what you paid for it?
I have 20 cents profit.
20 cents profit. Okay. So remember, by the end of the day, if it expires today, if we're not at 442.50, or we, if we're going to pull back a little bit, you're probably going to quickly lose value on the trade.
It's
So
time to close it.
okay. Yep.
I
don't think that's a bad play at all. I think right now, Frank, I think I might close out my MES trade here. Let's go MES. So this is pushing pretty nicely to the downside. That was like my target for the week. I'm up about $1,400. So I took the debit for 233. If I close these out, 1, 2, 3, trading for $500 right now. That's over. Let's see here. Yeah, I mean that's over 100% gain. So let's see, 50. Let's go 509 minus 233. So that's about 118% gain this week on a little options hedge. We are pushing a little bit lower. I'd like to see this also push lower, but it's kind of mission accomplished on what I wanted to achieve, which is I want to see price fall into these like decent support zones, liquidity zones. So I think I'm going to take profit here and take my hedge. Actually, if I move a stop loss, there's no guarantee I'm going to get it filled there. Let me see if I can get filled for 510.
That's a giant debit.
233 debit. It was like $1,000. I'll give you the mechanics here, but I just stacked up some trades. We're through my second one. I'm going to see if I can get 510 for this trade. It's showing about $1,400 of profit, which I'm okay with for right now. And if there's more downside, that's cool. But I think I'm just going to close it out. So 1, 2, 3. Let's go 510 and close this out. That should be the mid price of all these. Fill the 510, no problem. Okay, very nice. And positions 1, 2, 3. Let's go 510. And I think I'll just leave it there at 510. It's getting filled pretty easily at 510, so that's good. Let me see if I can squeeze out a couple more bucks. 1, 2, 3. Close. 514, maybe 512.50.
I think what I'm going to do is looking at the cues, maybe looking for cheap puts if they're there for tomorrow or for Monday. And the 200-day moving average. So that was kind of what I did yesterday. 442 is the 200-day moving average on the cues.
Okay.
So it's up today. It's up to 20. Let me see this. It's up to 22 cents. But Monday is probably going to be a little more costly because you have to pay more premium, I think.
For like doing it now to pay over the weekend?
Yeah.
Yeah, that's true. 520. That's a nice little jump. Let's go, baby.
Maybe I'll move it lower. I'll do like a 425. See if that's cheap. And then maybe sell it for, if it's like 15 cents, maybe I'll sell it for 30. But that's only if we see this continued move lower. I'm going to go ahead and close out this put that I have today.
Okay.
What else do I have?
1, 2, 3 here, there. Dang, dude, this is way up there. 589. That's not filling at 589. Let's get 525 maybe. Fudge. All right. Looks like 520 is going to be about my fill. Try to get 519. $518.
You know, this is really not a high volume move.
This move down?
Yeah.
Yeah.
At least from what I'm seeing.
Okay, I'm nickel and diming this thing down to 516. Okay, so trade-wise, 516 was the credit. Minus 233 is 283. That's a net 283 on a 5 multiplier. About 14.15 an account. So times 8. Oops, that was wishful thinking. 14.15 times 8. About 11 grand on that hedge. Not bad.
Nice.
Not bad.
Just a very easy 11K.
Just a little easy 11K. Don't mind that at all. And then this is really what I need to pay the most attention to now. My play on ES for the day. So here. So 1, 2, because now my 435 is in the money. This is all actually perfect. So right now it's up about 300%. Let's check the analysis tab here. So pin, and pin. So 35, 95, 75. Yeah, so this is right in the middle, dude. Now, all I need now is I need time to just decay. That's the best thing for me to get this profit trap. Like right now, the real P&L shows that I'm up around, I mean, it's trading for 12.50. So let me do the math on this. So if I have a 12.50 credit minus the $4 debit, I'm up 8.50 times 5. I should be up about $425 right now. If a little bit more time passes, then this profit trap grows in size. And this, if you ever seen, like, it doesn't really show it well in Tasty, but the actual price. So this is my ideal profit scenario, and this is at expiration. But in Thinkorswim, you can use, like, it'll be something like this. So there's a unrealized that's like represented real P&L, and by the end of the day, that ends up looking closer to your profit trap. So the longer I wait, if price stays right here, the longer I wait, the more that my real profit will show up. And that's essentially what I'm going to be looking for. I want to close this thing out. If this gets up to like $20 or better, I'll probably take the profit because I'll be up about $1,000. So
I got you.
$1,000 in account. So that's the plan, is to try to take that trade and just let it decay. But like I said, at around 2 p.m. today, I got to bounce out, and I mean, I know it's cash settled. I don't really have to do anything. This might settle on its own if I let it, but I'm not sure. I don't know. I mean, I guess I have nothing to lose. If it's just sitting right here in the profit trap, if I give it another 2-3 hours, even if I'm gone, this might work out to be a cash settled freaking, $1,500 profit. So
Yeah,
I'll think about that. Good
that's
stuff.
good. So you just have to wait.
I just have to wait.
It sounds.
That's
Sounds
hard.
very
Sometimes it's the
kind.
hardest thing to do, right?
Yeah, because you really just never know.
Well, and here's why you don't know. And I'm saying, like, right now I'm up around, $12 or $13, like $8.59 credit. But like, look, if we have some nasty snapback like this, guess what that means? That means that my butterfly trap that looks good now, all of a sudden price reverts back, and I'm back in my risk area.
Yep.
So I would say what I just did well is I timed that MES trade pretty nicely, and I don't know, we'll see what happens. Like, this could be just a quick, pop to the upside, and then it just kind of stays here for the rest of the day, or this is a high low, the day finishes right in the middle for the day, it freaking comes all the way back up. We have crazy volatility. Markets can do whatever the heck it wants, right? So I hope we settle in near the lows. I'm looking at some of these like volume profile levels. And let me go back to this chart here. Look at how fast that was. That just jumped up like 30 points in a heartbeat. Let's go to this chart on ES and some of the levels that I see. We're in some open space, so hopefully it has the ability to travel. Like, this is some dead space. This is some structure. But yeah, man, I'd like to see it just kind of work its way today into this little inefficiency zone. So I'd like to see it settle in near the lows if it can, but who knows? Price does what it does, and I'll
see.
take my best shot. So, hey, do we have somebody coming up at 11 o'clock, or is this you and I?
Yeah, we do have to go now.
Okay.
Nick Phillips is coming on.
Okay. Like, after this week, I know I was in and out, and we only had a couple. I think I was on Tuesday and then today, but coming into next week's trading, there's a lot of stuff that I'd like to discuss with you. I mean, we can look at those butterfly situations. I also want to do some testing on my end. I'm looking at I've got beta access to the Tasty Trade Lookback software, and you and I have talked about like those, end of day trades where you like put on a call option at the end of the day and go out to the next day and see if you can get some of those rips. I'm going to try to test that this weekend, so I might have some more info for you. And I probably can only go back to 2022 because that's when 0DT started. But still, it might be pretty interesting to see, like, if all we did towards the end of the day around like 2 p.m. or 2:30 p.m. Eastern time was buy an at-the-money call option, and then the next day it's up because the gap's higher. It's defined risk because the call option is either going to be up in profit or go to zero. And so you can test that profit percentage and test like 50%. You can test 100%. You can test wherever you want. But I'm gonna play around with that for the weekend. So something to share next week if I find some good stuff.
Cool. Well, I'm interested to see.
All right. Thanks, dude. Thanks for popping on with me. That was fun.
Yeah.
Per usual. All right. Thanks, everybody. And who's on next? Is it Nick coming on next?
That's right. Yeah.
Yeah. Cool. All right, everybody. Have a good day. Happy Friday.
See y'all.
Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey, what is going on, everybody? Welcome to this segment of the A1 Trading Show. Always a tough act trying to follow Chris and Frank. They so full of so much information here. just taking a look this morning at the NASDAQ. That's what I was looking at before the show started. Interesting price action here. If you guys remember the last time I was on the show, one of the areas I was calling for buys out of is this area. If we get the proper price action, I still have not seen that. I don't want to say that this has gone too far below my area for me to consider a purchase here, because it really hasn't. It hasn't broken out too far below. And the end of the day, today, anything could happen. Let me actually put that back. I want to keep that marking there. Something that could be a decent little surprise for me, personally, would be to see something like this when we pop up out of here and we get this smaller head and shoulders right here at this right shoulder zone from this overall head and shoulders situation going on. Inverted head and shoulders, I should say. So still a valid area for me, even though yes, price has dipped down below it. I think this could potentially be a bit of a wicking situation. Now, it's not a guarantee. It's definitely not a, like, oh, for sure. If we close heavily bearish today on NQ, I'm not going to like it anymore at in this area. I would need to readjust my outlook here. All right, moving on. Let's go check the Doxy real quick. It's going absolutely bonkers right now. Do we have headlines coming through? Waller. I would also cut at consecutive meetings if data calls for it, as I would be for larger cuts if need, as I would be for larger cuts if needed. It is likely a series of reductions in policy rate will be appropriate. Okay. Nothing necessarily new. I would be an advocate for front-loading rate cuts if that is appropriate. It's interesting that we have Waller saying this stuff, but we're getting these stronger doxy reactions at the time that he started speaking. So pretty messy price action this morning on the dollar, as the NFP report came out and was pretty ugly, to say the least. I believe we had, I don't have the numbers right in front of me, all of them. Just a pretty ugly mixed report here. Let's see. NFP at 142, down from the 165 forecast, lower than the expected, but higher than the previous. And actually, the previous got a revision down to 89,000, I believe. So much higher than the previous, but still less than expected. And then we have the unemployment rate came out exactly as forecasted, slightly lower than the previous. Average earnings month over month and year over year were both up from previous and as forecasted. So bit of mixed data, tough to navigate what that really could mean for the market, which is when I turn my focus to what the Fed speakers were saying today. But this price action here on the dollar is not making much sense to me based on what Fed's Waller is saying. So overall, I'm staying out of the market today because all this is, big drop to the downside, big push to the upside, big drop down again to the downside, big push up. It's simply just a consolidating market if we pull out to like the 3 or the 5 minute, slightly bullish dollar this morning, but mostly just sideways. If we think about where we came into the NFP report at right here, we're basically still at these levels. We traded down from these levels, popped back up above these levels, traded back down into these levels, and now maybe testing this previous resistance as new support, but really a tough attempt at defining any kind of a directional edge here. So Doxy looking relatively unstable this morning. Let's see, what do we have on a bigger time frame? look. Still just at these lows that we've established over the last couple of weeks, being here at this 100, 101 level. Finding some support, definitely found some support over here at the end of August. And now we're finding some support again this week at the end of this week. So kind of a tough, the doxy's in a tough place for me right now, fundamentally, because we have two competing ideas, sort of presenting themselves. We have a Fed that wants to go easy on monetary policy. We're moving into an easing cycle, potentially, most likely. Yet we have two presidential candidates who would both be, based on their economic proposals, kind of nightmarish for inflation. Either way it goes, from my understanding, I may not have a super thorough understanding, and I'm not trying to get political, merely based on what I've seen from both the candidates. Either one of their economic proposals, if enacted, is going to cause inflation issues, which is going to be, I'm interested to see how the Feds, handle that. And also, if, let's say, Trump gets elected, he's proposing himself a seat on the Federal Reserve Board, I believe, or the presidency a seat on the Federal Reserve Board, which is interesting. Either way, a Harris win or a Trump win, both bad for inflation, which would ultimately push the dollar higher. Yet at the same time, we have a Fed that is potentially, not potentially, most likely easing, and we've got a clash of ideas here, clash of fundamental elements. And so, which one's going to win out? I think the lowering of the interest rates may see some sustained bearish pressure on the dollar, but that the election is gonna challenge that bearish notion. I think it's gonna, everybody that's bearish on the dollar, like I have been basically all year, is gonna have their positions and their outlook seriously challenged via this election. Either way it goes. So I'm not. The dollar's tough right now because of what is going on geopolitically here. So yeah, very interesting, very, very tough to try to navigate this situation going into, what is it? We have 60 days now, around about 60 days until the election. We have a couple weeks until the FOMC meeting. So yeah, right at 60 days. It's gonna be a very interesting couple months, I think. All right, moving on. Let's go look at some other things. Let's go see how the S&P is doing this morning. S&P is still in my valid buy zone here, being this sort of area of support where price reacted from here. If we get some decent rejection in this area out of the S&P, I think it would be a good area to be buying from. The next area for buys that I would consider something on a technical basis would be right in here. This would be the next area I would be looking to buy in. This is my favorite zone to start placing buy orders, but I need to see price action agree with me a bit here. So it's going to be probably, I would anticipate one potential scenario that would make me interested in this, which would be a 4-hour double bottom, similar to what we have here. There's a little bit of a potential, I guess, for my favorite head and shoulders, kind of, which would be a push out into here, back to sort of the top of this buy zone that I have marked, and then up from there, you got your shoulder, head shoulder pattern. But yeah, see this support zone on ES holding is much better for me positionally than something like NQ not holding. Now, NQ not holding would be a higher risk trade based on like a technical. Well, technically, it broke out below my buy zone, but on a position basis, depending on how this chart ends up playing out, positionally, this could be an excellent opportunity with this dip down below here. If we see ES start to pull back out of this buy zone, and we see NQ starting to sort of follow the same sentiment as ES, you know, you don't always want to trade equities against each other. It's not 100% like correlation there, but there is enough of a positive correlation that I would, if I saw ES pulling back out of that buy zone, and I see NQ starting to give me some rejection patterns here after some of these bigger legs to the downside. Positionally, the NQ trade would be better because I could get in at a lower price. But safety, as far as the better setup, would be ES for me. All right, so covered that ES and NQ. I'm looking for buys at some point if I get the right price action. I'm not just going to jump into something blindly. I need the right price action, and I am most likely scalping out of this area. So moving on, let's see. Good morning to everybody in the chat, by the way. Do you guys have any questions, any charts you want me to review? If so, feel free to drop them in the chat. Let's go check out the fan favorite gold. Even though I tend to still not. The only time I really check out gold is when I'm on the A1 trading show. I don't follow this that much. Although I don't mind what I'm seeing for continued potential upside. It's not great. We're still just kind of trading at the top of this this range I have marked here. But a little bit more of this kind of price action will have me feeling better about our potential to hit like 2,700, 2,650 at least. But still not like in love with what I'm seeing here, because we've hit the top of this range, this channel, and price is stuck. Price has been stuck since August 18th. So we're going on 3 weeks here, almost 4 weeks of just sideways price action in gold. So nothing actionable for me at this point. This is the exact same thing I've said for the last, like I said, 2 or 3 weeks on the show. Is we're at the top of this channel. I don't necessarily want to sell it because I don't have a real good fundamental reason to sell it. If I got a really good fundamental reason to sell gold at these levels, these would be incredible levels to sell gold from. But I also don't want to buy it. I have more fundamental reason to get in on longs, but I'm just not a fan of the current price action. I need to see a very significant break above these levels. I want us to trade. I mean, it would be fantastic if we could trade up above 2550 and hold above these levels before I look to buy in and continue to ride this thing up. Yeah, kindness asked, no currency pairs, question mark. Yeah, we can absolutely touch on currency pairs. Anything you guys want me to take a look at, definitely let me know. WTI, I was listening to PIQ Morning Blast this morning. It's a great little London session opener kind of podcast space that happens on Twitter. And they were talking about something that happened with WTI yesterday. I missed whatever those headlines were. So let me follow up with that and see if I can find anything. Wasn't an OPEC headline. Might have been an OPEC headline. If anybody knows the headline and can send it through, that would be massive. Okay, agrees to delay October oil output increase. So that was yesterday at 10 a.m. I mean, whatever that move was kind of got faded. I'm not like a massive skeptic, but was that headline OPEC driven to protect some of the downside that we're seeing in WTI? I don't know. That's conspiracy theory, tinfoil hat stuff. I'm not going to get into that now, but these WTI oils, these low levels, WTI levels, WTI oils, these WTI levels. Honestly, I would love for it to keep coming down, break down below these support levels, drop down into the 40 range again, 35 to 40. That's a prime buying opportunity. This is not bad. This is definitely something worth considering if you're looking at like a macro time frame buy. You're at a decent level here. If you drop down to maybe 4 hour or 2 hour and you get the right reversal patterns or a significant enough reversal indication to go ahead and start buying in, certainly not bad levels at all. When is Waller's speech ending today? I'm not sure when the Waller speech is over. I don't know. It might already be over. Let's see. Is he still talking? Oh, no, he's still talking. Oh, he literally just finished. So there you have it. He finished speaking. Now it looks like they're moving on to Q&A. So yeah, if you're trading right now, keep tabs on something like Financial Juice. Make sure that you're paying attention to any new headlines and maybe watch that speech live because it looks like he's leaning very dovish, but you never know how the Q&A portion could go. He could answer something drastically different, and we see the market start to price in a different idea here. What's insane is after all his dovishness, what we saw out of you know what? Let me double check what I'm about to say here. Yes. So he comes in and starts being incredibly dovish right at 11 o'clock, and we see the dollar absolutely rally to the upside. Some of that upside rallying being challenged about 10 minutes in, but still interesting price action. Like I said, for me, not a real easily definable edge this morning when it comes to the Doxy, as 8:30 news dropped right here. And where are we at? Right where we were trading prior to NFP release. So what does that communicate to me? That communicates to me that the market had a bit of a freak out, faded the news. This move got faded. It's a mess. It's chop. This is chop. This is big price action one way, big price action the other way, big price action one way, big price action the other way, big price. This is chop. These are days that are hard to survive for a lot of retail traders. So hopefully you guys stayed safe and didn't over leverage anything or throw bet the farm on any one position today. It's definitely a tough day to be in the markets. All right, let's see. USD CHF. I'm gonna start ticking these off, and then I gotta get going here soon. USD CHF. If you have any requests, try to get them in now. That way I can try to touch on them. I mean, the absolute best opportunity for USD CHF could potentially be coming up at this 83.5 level here. 8,300 or 83 to 83.5 would be a decent little range to look for an opportunity to buy up. The problem again is the sentiment surrounding the US dollar. Everything tied to the US dollar right now is tough for me on a macro scale, because the Trump, the presidency challenge on inflation is making the dollar outlook a little tough for me. It's not as clear cut and simple as the Feds are in a rate hiking cycle, so we should see dollar upside, sustained dollar upside, or the Feds are in a sustained rate cutting cycle, we should see some dollar downside. Those are kind of dream scenarios for traders. Right now we have the Feds have historically high rates and about to enter what we believe is going to be a rate cutting cycle. But then you got to bring in that fiscal policy side and go, but both the proposed candidates for the US presidency are going to have a negative impact on inflation. Theoretically, their proposals would have a negative impact on inflation. So tough to gauge there, but I would say, it's just personally, dollar weakness is still in play, but do I want to get involved at these levels? Certainly not. Do I want to sell USD CHF when it's at a major low? Definitely not. Personally. So this is a pair that is not worth looking at currently, in my opinion. Now, if things change drastically on the economic data side of things with the US, if all of a sudden we have a resurgence of inflation, the labor market starts showing up incredibly strong again, that would be a reason to buy the dollar all day long. So absolutely, if let's say we get that over the coming weeks, yes, this is a perfect position to start getting involved with USD CHF longs. But without that data, this is poor positioning to try to continue to sell from. Okay. USD CHF, WTI talked about, odd NZD. With odd NZD, this is a pair that for me, I don't love to trade because their economies are so closely knit that when you look at odd by itself, the Australian dollar index versus a New Zealand dollar index, they move so very similarly so much of the time. Like, I don't have the exact statistics. I don't want to throw out a number, but if you're watching, if you come over here and you watch NZD and you watch the Australian dollar, these indexes, you're going to see very similar price action a lot of the time. So Thursday, July 11th, big fall off, odd. We'll go. Oh, I'm way ahead. Why am I still in June? Thursday, July 11th, right here. Big fall off for NZD. What day is this? Friday, August 2nd. Friday, August 2nd. Oh, a little bit. Big push up for odd. Big push up for NZD. And this is, we're just taking a look at a couple quick examples, but they've moved so closely. I like to, when I'm trading if you're trading currency pairs, the general idea is pair a strong currency versus a weak currency. If you have two currencies like the Australian dollar and the New Zealand dollar who move in the same direction a lot of the time, odd NZD is one of the least attractive currency pairs, in my opinion, because if we have downside in odd, there's a high probability that we're having downside in NZD. So where does odd NZD go? It just there's no definable edge, in my opinion, or at least that I can discover via trading odd NZD. So personally, I would never look at this pair. But if we're just talking about a technical outlook, we're bearish. Odd NZD is bearish. It is at a major level of support currently on the 1 hour. Kind of a not necessarily a major level of support on the 4 hour. It's kind of actually broken down below a major level of support on the 4 hour. And now it's sort of just in limbo, I would say, in this zone here, because you've got this major support area, and then you've got this major area of support. And price is right inside that zone. So for me, I could see a couple things happening here. I could see this just hanging out for a while until something new hits the market for either one of these currencies. But again, it's just so tough because you see the Australian dollar rise in value. A lot of times you see New Zealand dollar rise in value. So the difference in their moves is just not, I don't know. I don't really like it. I'm not gonna go too in depth on this one. It's, you're at a great area of support on a lower time frame to maybe potentially try to scalp out of this area. Like the way I would approach odd NZD in this moment right now is, okay, we've hit a major support area on a 1 hour time frame. Drop down to the 2 hour. We're starting to reject it. Cool. What do we see forming? Potential head and shoulders. It would be fantastic if we had like some sort of a fundamental bias to help us, buy this up. Like if all of a sudden we had something for the New Zealand dollar come out that showed incredible weakness on the New Zealand dollar side, or we saw something from Australia that, gave us incredible strength on Australia, or even if we saw some good news out of China, because China is the #1 exporter of the Australian dollar iron ore commodity. The good China data is typically good for the Australian dollar. Not necessarily the case with the New Zealand dollar, and that's one of the biggest points of difference between the two, is how closely Australia works with China via trade. So, if we had some kind of a fundamental reason to buy the Australian dollar, this would be a great opportunity. But on a technical basis, let's say you typically risk 0.25% on a trade. This would be what I would call like a B tier trade or a C tier trade. It is purely technicals only. We've hit a support level. We've started to reject. We've rejected that support level once. We tap back down into it further, rejected it again. If we can try to get near this level and create a bit of a head and shoulder scenario and reject again, that's a good opportunity technically. A B tier risk stops below the lows here just a little bit. And then, you run this back up into maybe this big area of consolidation that we have. The way that I like to approach a lot of my trades is formulate the whole idea. Why would I be looking to get involved? First of all, with this specific idea with odd NZD, I'm not trading this. I probably would never trade this. Am never going to trade this, most likely, because it's odd NZD. I don't like this pair. However, if this was a different currency pair and I had a reason, a fundamental something, that's a piece of the thesis. Okay. And then the second piece of the thesis is the technicals. Well, I have a reason to buy the odd. It's at a major support level. It's giving me a rejection formation. Let me wait for price to come back into the area I want to buy it from. Let me see if it rejects this area, gives me some price action indications that it wants to reject this area. And then maybe I get a little bit of a less pretty entry, and I take it back into this target range for a 1-to-1, and then set my stops at break even, take partials, and let the rest ride out. That's sort of the way that I would approach this. But again, I don't love this trade because my edge is not present for this current trade. All right, let's see. USD JPY is yo-yo crazy. Yeah, UJ, everything tied to the dollar this morning is most likely going nuts. I have not looked at everything, but I'm sure we can just cycle through this. Odd has actually been one of the most consistent downside moves against the dollar today. Interesting. Euro back and forth. We got this down, up, down, up, down. And now trading near the levels we were trading at prior to NFP releasing. GBP USD, very similar to odd, where it did this initial spike and then fell down and stayed down. Odd did this initial spike, fell down, stayed down. NZD is probably very similar, yes. USD CAD is pretty much, it seems like maybe the safe haven or the risk asset currency. See, the doxy so jacked up though. It's making it a little difficult to track some of this sentiment. But when you have odd down, let me go back to the Forex pairs. I'm sorry. You have Australian dollar down, you have the New Zealand dollar down, and you have, this is technically CAD down because it's USD CAD up. You have the CAD down, we'll call it. That's a risk off market essentially, which it would be mirrored by downside in equities, which we have. Downside in equities, which we have. Again, so yeah, very risk off market this morning. As far as USD CAD goes, is the move gone? It's 11:30 on a Friday. We're stretched pretty heavy to the upside from where we were trading at market open. Basically, I mean, I'm certainly not getting involved in a position buying this late in the day. Now, that idea could shift over the next hour or two if, let's say, we get a decent little pullback into maybe some of these previous support zones here. If price can trade back into this zone and give us again a nice reversal indication in this area, sure, why not? Take a stab. Low risk C tier trade for me. Every trade today is basically B or C tier because it's the NFP print was terrible and the doxy is, can't make up its mind which direction it wants to go. The only maybe good trades, yes, it was tough. It was tough to identify. You really couldn't identify this risk off sentiment until after it's passed this morning. there was really, I can't think of a reason out of the jobs report or anything that Waller, or who was the other speaker today? I think it was Meller, maybe. No, Williams. Fed Goolsby is speaking. I did not see him on the calendar. Today's employment data is a continuation of what we've been seeing. The job market is slowing down, raises some serious questions about this meeting and next several months that we make sure not to make the labor market turn into something worse. There is an overwhelming Fed consensus for multiple rate cuts. So this should all be theoretically doxy downside catalyst, and we're seeing still some support in the upside situation for the doxy. So for me personally, I think best move for the day is to walk away, let price do its thing for the rest of the day, and the next week come back knowing that we're in a bit of a stalemate with the dollar. What do we have next week? CPI next week. Okay. So that should be interesting. I know the Feds are really focused on labor right now, but inflation could give us a decent indication for direction, CPI and PPI. But all right, guys, I think I've reached my time here. It's 11:40. From all of us here at the A1 Trading Show, I hope you have a great weekend. Trade safe the rest of the day if you guys are going to be involved in the market, and we will see you next week. Cueing the outro scene here in just a few minutes. If I don't get cut off here, Jorge, how long do you think the pullback of SPX will take? I mean, that's kind of like that's a tough question. Like how long it could be. I could see price action delayed until CPI next week. Something like this. I could see a couple things. One, the market fading this entire move because what is this reaction to a messy jobs report? Pretty hefty. So I could see the end of today going into Monday, a resurgence of price back into these levels that we were trading at prior to the NFP release, and then CPI coming out, and CPI really giving us the direction either way, either down or up. So that's sort of what I would say. CPI is kind of the next major pivot point, I think, for equities, well, for the entire market. So I would say probably next Wednesday, Jorge. All right, guys. Looks like we're good to go here. I'm gonna go ahead and sign off. As always, you guys have a safe weekend, safe trading, protect yourself. From all of us here at A1, have a good one.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.